Yes, people, a very, very happy morning to all of you. Thank you so much. So, guys, we're doing this chapter called as chapter name itself, we don't know, sir. Very good. So, this is introduction to accounting. You can say accounting process. Okay. So, it's a combination of chapter 1 and chapter 2 together. Hence, you had this confusion. Anyways, so in the last class, we had a discussion about what is the meaning of debit and credit, correct? Who coined this concept of double entry system for accounting? So we have discussed all of that and we'll do a very quick revision of that. So guys, in accounting, we follow double entry system of accounting. In accounting, we follow double entry system of accounting, which means in a transaction, if you take a transaction, there are two-fold effect. In that one effect is debit, another effect is credit. This concept is being conceptualized by a person named Sir Luca di Pacioli, right? He was an Italian mathematician and he is referred to as father of accounting. He is the one who has designed this concept of double entry system of accounting. In their language, it was earlier called as, which language? In the Italian, in the Latin language, in the Latin terminology, the word debit was called as debior and credit was called credior. Debior, every time to tell it is very difficult. So they gave a shortcut called as DR and CR. So DEBRE. D and R is coming from that word debior. And credior, from that we are getting the, abbreviation called as CR. Right? Same thing in Latin is termed as debior is debito. Credior is credito. Any problem? No problem. Ultimately, in local language, you have to say debit and credit is nothing but plus and minus. It's for our understanding. The entire game of debit and credit is nothing but plus and minus. Then why don't we use plus and minus? Because sometimes debit will act as plus, sometimes it will act as minus, sometimes credit will act as plus, sometimes credit will act as minus. Hence, instead of getting in confusion what to add, what to minus, they said we'll do one thing. We'll give debit credit. Rules will give. With that, we'll give the accounting principles. Both put together will design the rule in such a way that the accounting process itself will decide what to add and what to minus. This you'll understand better when we do ledger. This you'll understand better when we do ledger. So in the T-shaped format, left hand side is called as debit, right hand side is called as credit. The T-shaped format is called as account, ledger, but we also called as account. Got it, not got it? Super. In the last class, we started our discussion on the rules of debit credit. To do debit and credit, what are the rules that we have to follow? How many broad classifications of rules are there as on today? Two broad classification of rule. One is called as golden rule, another is called as modern rule. Golden rule ka another name is traditional approach. Modern rule ka another name is American approach or accounting equation approach. Got it, not got it? Last class we discussed this classification, this rule structure. Based on that, today we'll do sums. Now, before that, can we do a very quick recap of what is accounting process? What is accounting process? So accounting is a systematic process of identifying business financial transaction or business financial event. Next, measuring in terms of money. Very good. Recording through journal. Recording through journal. In recording through journal, what are the steps that you have to take care of? So the transaction that you identified, in that we have to look into accounts. How many accounts are possible?
More than
Two or more. Minimum two. Minimum two. Aspect will be only two, debit and credit, but account can be two or more. Two or more. In some transaction, 2 will be there. Some transaction, 3 accounts will be there. Some 4 will be there. Some 6 will be there. Some 10 will be there. We cannot keep a control of that. It depends on the transaction. It depends on the transaction. So first you'll identify the number of accounts involved in the transaction. Then that account you have to classify whether it is asset, liability, capital, expenses, revenue, what it is. Based on that, you have to apply the rule. Which rule? Either golden rule or modern rule. And then decide what to debit and what to credit. If you take care of all this step, which means you are following double entry system of accounting. Your transaction ke debit and credit kudute hai, it means double entry system is being followed. Got it, not got it? Okay. So recording through journal, then classifying through ledger. Why are we classifying through ledger? Because in the journal format, there is no provision for totaling. If I want to know total of something, that cannot be done from journal. So all the transaction, one more time, is posted to a place called as ledger for the purpose of totaling. Got it, not got it? Now, if the value is same on both the sides of ledger, ledger or the debit side and ledger of credit side, both are equal amount அப்படினா என்ன அர்த்தம்? The ledger is naturally balancing. Upon in the balance carried on, brought down, kadiyadu. If there is no balance carried on and brought down, will it travel to trial balance? No. But by chance, debit side ka total is more, credit side ka total is less. Where will the balance carried down come? Where will the balance carried down come? Credit side. Balance carried down, I'm saying. Credit side. Balance brought down, debit side. So what is the meaning of debit balance? If debit side ka total is more than credit side, we say that ledger is having debit balance. Or when we have the balance brought down on debit side, we say the ledger is having debit balance. Okay, not okay. I'm trying to put a concept in your head without any presentation on the board, so that I want you to imagine. There are two ways of learning. One, you see the board, what I'm doing, and you absorb it. That is one way of learning. Second, whatever I'm saying, you have to create a visualization in your mind. That will able to retain the concept very strongly in your mind. Got it, not got it? Got it, not got it? Now, if credit side ka total is more, imagine a ledger in your mind, T-shaped ledger. Credit side total is more, debit side total is less. Where will the balance carried on come? Debit side. Carried on debit side. Brought on credit side. So what balance it is? Credit balance. So if balance brought on comes from credit side, it means credit balance. Upon enna, credit or total is more than debit total. Any difficulty? No difficulty. Now, all the debit balance item will go to the debit column of trial balance, and all the credit balance item will go to the credit column of trial balance. So accounting is a systematic process of identifying a business financial transaction or a business financial event, measuring in terms of money, recording through journal, classifying through ledger, summarizing through trial balance, trading P&L and balance sheet. Got it, not got it? In the moonlight, we'll do summarization. What is meant by summarization? You'll understand when I do trial balance and final accounts. Got it, not got it? Okay. Once we summarize the data, what do we do? We interpret and analyze the data of the financial statement. And once the interpretation is done, do we keep the data with us? No. We will communicate that to the users of financial statement. In total, how many users are there? 7 users. Got it, not got it? Okay. Now, all of you know what is the meaning of asset? This is not the actual meaning given in the accounting framework. We'll study the actual meaning of the asset term, liability term, capital term, income expense. This original meaning it's given by the framework. Framework you will understand in CA intermediate. The true meaning is given, which is very complicated meaning. But here we are trying to put the same data in your mind in a simple language. You understand simple language? Rumbo easy and available. We are trying to understand what is asset. So entire foundation based on this language will decide what is asset, liability, capital, income, expenses. But the moment you come to CA intermediate, this language will get more professional. You'll understand in more in-depth perspective. Got it, not got it? Okay. So what is meaning of asset? Sir, asset could be any physical thing. It could be any physical thing. Or it could be a right. Or it could be a property owned by the business. Physical thing, example, apdina. Let's suppose I'm into business of buying and selling laptop. 10 laptop vaangirken. 8 with it. 8 I sold. Remaining 2 is unsold. Up it is there in my hand. That is a thing or not? It's a thing, no? Physical thing, yes or no? So is that 2 laptops in my hand an asset or not? Yes. So what is it? It's a physical thing. Okay. Then comes property. Property in land, building. That is also physical thing, but we call that as property. So asset is either a physical thing or a property or a right. Right another. Trademark, copyright, patent. About this I'll discuss in upcoming classes more also. So idella vandu pathina asset. I'll be using them in my business. So asset is any physical thing, right, or a property. This is owned by the business. Owned by the business. When you come to intermediate, I'll remove the word owned. You know what will I put? I'll put the word controlled by the business. Because for asset to be used in a business, ownership is not important. What is important? Control is important. But on the point I explained panna appadina, this related nariya point I explain pannum, which is equal to intermediate level, which I can't do it. So I have to put only certain languages here which you can understand at the foundation level. When you come to the intermediate level, I'll upgrade your knowledge. The word owned I'll remove. What will I put there? Control I'll put it. Got it, not got it. Because framework says that for an item to be your asset, ownership is not necessary. Control irundha mattu porum. Now your doubt will be, why control? What is control? That I'll discuss in inter. Okay. Asset is any physical thing, right, or property owned by business that has monetary value. That has monetary value. Or anything that needs to be received by the business in future. For example, I sold goods to customer on credit. That customer is called as a debtor. From debtor, I have to receive my money. So anything that I receive in future is asset. Anything that I receive in future is asset. Got it, not got it. Okay. Bank la வந்து நான் deposit பண்ணிருக்கேன் பணம் as a fixed deposit. This money, whenever I ask in future, will bank give me? Yes. அப்போ fixed deposit is my asset. I gave a loan to my friend from business. From business, we have given loan. That is called as loans and advances. It is called as loans and advances. Means loans is advance to one of my friend. Will that money come back to me in future? Yes. This is also called as asset. So what is asset? Rendu vishayam. Anything that I own in the business or control in the business. Don't ask the meaning of control. I'll discuss in CA intermediate. As of now, anything that I own in the business or control in the business is called as asset. Or anything that I expect to receive in future is asset. Got it, not got it. From this asset, I should get some benefit. I should get some benefit. Land irukengita. In the land which enna panna pora. Either I'm going to construct academy building on that and I'm able to derive benefit. What benefit? Economic benefit. What is economic benefit? Paisa. From running this academy, what benefit I'm getting? Economic benefit. Economic benefit means what? Paisa. Got it, not got it. So whenever you have any asset in the business, that asset should be able to get you some economic benefit in the future. In the building vechirukken, in the building la enna varum enakku? Economic benefit. Car I'm using in the business. With that, what am I getting? Economic benefit I'm getting in the future. Either by using it or by selling it. Yes or no? So generally, whenever you have any asset in the business, no, this is going to give some benefit or the other to me in the future. Some benefit is going to come to me in the future. I'm going to use it in the business so that I'm benefited. What I'm saying is so simple right now, no? When you come to intermediate, this will be more complicated. To make you just understand asset, liability, capital, expense, income, I'll take more than 1.5 hours. Because you have to give different examples to put into your mind. Now I'm doing it in a very simple perspective. Romba simple ah pesidren. Okay, not okay. So simple. At the foundation level, if I ask you, what is asset? Sir, anything that I own or control in the business is my asset. Or anything that I expect to receive in future is asset. Any problem here? Any problem here? No problem. Example, land, I own it. Building, I own it or control it. Plant and machinery, either I own it or control it. Furniture, I own it or control it. Cash, I own it or control it. Bank, in the bank, whatever balance is there, I'll receive in future. Because money is with bank. Bank is a third party. So I'll receive this money from the banker in future. So that bank balance is my asset. Stock, I own it or I control it. Asset. Debtor, I receive the money from him in future. That is my asset. I put some money in the share market. Whenever I want, I'll get it back in future. Whenever I want, I'll get back in future. It is asset. Like that, n number of examples we can give. Okay, not okay. Okay, not okay. Okay. What is liability? What is liability? Any money that you have to pay to anyone in future. Any money that you have to pay to anyone in future. That is called as liability. I purchase goods on credit. I purchase this mobile phone on credit for selling purpose. I have to pay the money. I have not yet paid. When will I pay? In future. Anything that I pay in future is liability. Got it, not got it. Simple term. But when you come to CA intermediate level, little bit extra masala I'll put into it. As of now, what is liability? Anything that I have to pay in future is liability. Okay, not okay. Okay. What is capital? What is capital? Capital is the money or the resources that the owner is investing in the business. There is one concept called as accounting entity concept. What is it called as? Accounting entity concept. Also called as business entity concept. That concept says that owner is different, business is different. Both are different. For example, we'll take example of Kalpavriksha Academy. Kalpavriksha Academy. Imagine for a second, this academy is a sole proprietorship concern. Appana in the academy are the it's my academy. Since it is my academy, can I record whatever transaction I want? I'll record the business transaction, personal transaction. If I go to movie theater, ticket, popcorn cost, everything can I record here? My entity, no. Pratik, Kalpavriksha, both are one. Pratik, Kalpavriksha, both are one. For both of them, one common PAN. All of you know, for both the people, only one common pan. You'll understand this little bit in future. Apo, can I record my personal transactions in my books of accounts? Can I record my personal transaction in the business books of accounts? No. Therefore, the accounting rule said that no, you cannot record the personal transaction in the books of accounts because owner ka transaction is different, business ka transaction is different. Hence, they came out with the concept called as business entity concept or accounting entity concept, which says that always we do accounting from whose point of view? Business point of view. Only business financial transactions are recorded. Personal financial transactions are not recorded. That segregation came because of this accounting entity concept, or else it is called as business entity concept. Any problem? Got it? So now, since owner is different and business is different, so business, to run the business, what does it need? Money. How will business have money in this initial stage, boss? When you were born, were you born with money in pocket? How much money you were born with? Zero, nothing. Likewise, when business I'm starting today, business is a newborn baby. How will the newborn baby have money, boss? If I want to buy this mobile phone in the business, who will give money? Business has to give money. But from where business will get this money? So business will take this money temporarily from owner. So any money contributed by the owner in the business is called as capital. Got it? Not got it? Upon a sir, if the business is closing today, should the business return back the money to the owner? Yes. Upon it is liability only, no sir. Anything that I have to pay in future, liability dana. Yes. That's why capital is also called as internal liability. Upon the liability what we spoke about is what liability? External liability. The money that I have to repay to the creditor, the money that I have to repay to the banker. Banker get a loan mangirken. From bank I've got the loan. Should I repay or not? Should I repay or not? I have to repay. Anything that I have to pay in future is liability. So any money that we have to pay to third party. Do you understand what is third party? Moonada Manisha. Third party. Who is not related to my business. Who is not owner of my business. Any person apart from the owner of business is called as third party. So my employee is third party of the business. My creditor is third party of the business. My banker is third party of the business. So any money that I have to pay to third party is called as liability. Which liability? External liability. Any money that I have to pay to owner is called as liability. But what liability? Internal liability. But confusion comes, no. Hence, to remove confusion, what they said, this internal liability, no, we'll give a name called as capital. We'll give a name called as capital. Got it? Not got it? Okay. All of you know what is the meaning of income and expense? Gain and losses. No need to discuss. Can I go to the rule directly now? Okay. Golden rule says that any account, once you identify business financial transaction, in that you have to select accounts. That accounts you have to classify. So now I have to decide, let's say I'm cash account. I should apply what rule? So for that, I have to classify myself. Cash is what? Asset. Like that, you have to classify yourself. Like that, all the accounts, all the types of accounts, which has got the flavor of income, gain, expense, losses, should go to which account? Sorry, which classification? Nominal account. Your house is nominal account. Nominal account. Come to nominal account. When you come to my nominal account house, I have my rules. I have my house ka rules. What is the rules? If your expense and losses, debit yourself. If your income and gain, credit yourself. Debit all, expense and losses. Credit all, income and gain. Okay, not okay. When you smell, all of you know. When you taste, all of you know the flavor of income gain. Income gain ka flavor is sweet. Everybody likes income. Everybody likes gain. Anybody in the room says that, no, I don't like income. Tell. Income gain, sweet flavor. Expense and losses, bitter flavor. Got it, not got it? Got it, not got it? Okay. All the accounts having the flavor of income gain, expense, losses. What is the rule? Debit all, expense and losses. Credit all, income and gain. Okay. Next. Now those accounts which has got the flavor of assets. Those accounts which has got the flavor of assets come to me. Where will you come? Real account. So all asset is coming towards you. Coming towards real account. But who cannot enter the real account house? Except 5 people. All assets will come to real account. Except 5 accounts. All the other accounts will come to real account. Which are that 5 accounts which is prohibited to come inside real account? Bank, debtor, bills receivable, prepaid expenses, accrued income. These 5 people are not allowed to enter the real account house. But where will these 5 people go to? Personal account. Personal account. Got it, not got it? So all the assets will go to real account except bank, debtor, bills receivable, prepaid expenses, accrued income. Except this 5, everything will go to real account. Got it, not got it? So if you come to real account ka house, what is the rule of the real account house? Debit what? Comes in. Credit what? Goes out. Debit what? Comes in. Credit what? Goes out. Super. What are we left with? Personal account. Which accounts are we left with? All liabilities and those 5 assets. All liabilities and those 5 assets. Which 5 assets? Bank, debtor, bills receivable, prepaid expenses, accrued income. We'll go to personal account. In personal account, how many sub-classifications? 3 sub-classifications. What is that? Natural personal account, artificial personal account, representative personal account. When do we say somebody is natural personal account? If that person is created by God, creation of God, which is human beings, are called as natural personal account. If any entity is created by virtue of law, law is creating you, up to you're an artificial person. Example, sole proprietorship concern, partnership concern, companies. In companies, we have OPC, one person company, private company, public company, banking company, NBFC, society, trust. All the kinds of entities will be classified under artificial person account. Got it, not got it? By being artificial person account, we call them artificial person account. No. Why we call them artificial person account? Because the moment you call them artificial person account, now they have the power to buy the property and sell the property in their own name. They can sue somebody in the court, or they can be sued in the court by somebody. Got it, not got it? So that way we call them as artificial person. Then third comes representative personal account. Representative personal account. What is representative personal account? It is representing a group of people. For example, outstanding salary. I have to pay salary. 31st March ka salary, I'll pay after March. I'll pay in April month. Appa 31st March ki pay pannala. Ana service vaangitinga. You got the service. You're supposed to pay, but you haven't paid it. When will you pay? In future. April 2nd, 3rd, 4th. You'll pay in future. So liability or not? It's a liability. All liability will go to personal account. But can I put under natural personal account? Because salary is to be given to human being, no. So can I put under natural personal account? No. Because it's not one human being. It is representing a group of multiple people. When I pass the entry salary to salary outstanding, this is representing a group of people. So for that, they created a separate account called as representative personal account. In that, what all comes? Bills receivable, bills payable, outstanding expenses, prepaid expenses, accrued income, unearned income. Got it, not got it? Okay. This classification is all given by the olden days. Today, things has got drastically changed. Dynamically, a lot of things have changed. In many places, this becomes outdated. But still, we have to study this because it's a part of our syllabus. Got it, not got it? So all these accounts, if you come to personal account, what is the rule? Debit the receiver, credit the giver. Debit the receiver, credit the giver. Any problem? No problem. An important point. Whenever we talk about real account or nominal account, this is both from which point of view? Whose perspective? Business perspective. Upon business or expense, business losses. Business income, business gain. In business, money coming in business, money going out. So everything is from business perspective, business point of view. But personal account is always it is applied from perspective of the third party. For example, you're telling receiver, no. There's a rule here. No rule? Here. Debit the receiver, no. We are not talking about the receiver being the business. Business receive பண்ணுதா இல்ல business give பண்ணுதா அப்படி இல்ல. Opposite party. அவர் giver இல்ல receiver ன்னு பார்க்கணும். Got it, not got it? So while applying the rule of personal account, you see whether the opposite party is receiver or giver. Don't see whether business is receiver or giver. You have to see the opposite party, whether receiver or giver. Got it, not got it? This picture is clear or not clear? Okay. Can we do questions based on this? Okay. So please take your ICI study material. Chapter 2, page number 2.25. Those who have, take it. Those who don't have, enjoy the soft copy. Who don't have the book still? Okay, wonderful. Majority people don't have. How many of you in this have not applied for ICI registration yet? Only one. Two. 1, 2, 3. 3 of you. Okay. By when are you planning to do the registration with ICI? Do it by today, tomorrow, because book will take time to come. So yeah, don't delay that. Right? Okay. Either okay, va? Is it clearly visible on the screen for to all of you? Anushruti video on, Gokul video on, Taran Siddharth video. Okay. Now, illustration 5 says that journalize the following transactions. Oh my God. They're asking journalize. Sir, you didn't even teach journal entry. No, sir. Okay, no problem. We'll learn now. I'll take an opportunity for 5 minutes and teach you what is journalizing and what is the format. Can we do it? Okay. What is the meaning of journal? So this is got a meaning. Yes. This also has got a meaning. Jour in French means day, right? So whatever transaction is taking on day-to-day basis, that has to be recorded. Hence, that process of recording the day-to-day transaction is called as journal. Got it? Not got it? Okay. Jour means recording the financial transaction. Which financial transaction? Business financial transaction. Only transaction. No. Event also will come. Event also will come. But event does not come on day-to-day basis because event comes generally at the end of the year. That's why they have not put event here. Got it? Not got it? Okay. Journal means recording the financial transaction on day-to-day basis. That is on daily basis. As soon as the transaction takes place in a chronological order. Got it? Not got it? Now, today, 10 transactions taking place. For example, let's say I have a shop. In the shop today, I came at 9 a.m. I did a purchase. I purchased, let's say I'm in the business of buying and selling mobile phone. So I purchased 10 mobile phones 9 a.m. from the manufacturer or some dealer. Okay, wow. 10 a.m. one customer came. I spent money for tea. 10:30 a.m. he liked the phone. He purchased it, which means I sold it. Sale transaction. Next, 11 a.m. another customer came. Tea expenses. Again sale. Got it, not got it. Now, should I record the journal entries in the same order? In a day, you can record the transactions however you want. You can jumble the order. There's no problem. Up now, what is the meaning of chronological order? Inniki oda transaction, inniki record pannu. Today's transaction, record today. 9 a.m. transaction, you record at 9 p.m. tonight, no problem. But today's transaction should be recorded today only. Tomorrow's transaction, tomorrow. Day after tomorrow's transaction, day after tomorrow. That is called as chronological order. But people misunderstand and think that in what order the transaction took place, in the same order we have to pass the entry. That is not true. Inni order transaction, inni record pannu. You can change the order for today. You can jumble the order within the day. But today's transaction I cannot record tomorrow. That is not allowed. Got it, not got it? Okay. Every journal entry that you pass has to consist with it something called as narration. What is narration? The description of the transaction is called as narration. If you entering a record pannirkeenga, what have you recorded? Somebody has to describe it in a meaningful English language, simple English language. That is called as narration. Got it, not got it? Clear or not clear? Tell. Leave it here, no problem. Now, the short description of the journal entry is called as narration. Very, very important. No narration, no mark. In exam, no narration, no mark. Now, very important from true and false point of view. Journal is called as book of original entry. It is book, not books. Books for subsidiary book. Subsidiary book. That time I'll discuss why it is called as books. Journal is called as book of original entry. Origin means what? If you split the word original, origin varum. ORIGIN means what? This is the starting point of the accounting. Accounting begins with journal entry. The first practical step of recording is journal. That's what it is called as origin. Origin means what? The point of start. The point of start is called as origin. If you make any mistake, you cannot correct the mistake then and there in respective places. You have to come back to the journal and do the correction. We learn this in a separate chapter called as rectification of errors. So anything that you do or redo has to begin with journal. That's why it is called as book of original entry. It is got another name to it. It is also called as book of primary entry. Book of primary entry. These both, don't forget it, from true and false point of view, very, very important. So journal is called as book of original entry, or it is called as book of primary entry. Primary entry. Got it, not got it? Okay. Sir, what is the format of the journal? First line you have to write in the books of, if I'm preparing the books of Reliance Industries Limited, I will write in the books of Reliance Industries Limited. In the entity book record pandringa, and the entity per varum. If you're doing journalizing for CA.Prathik Academy, then you have to write in the books of CA.Prathik Academy. So business ka entity name will be there, no? That name has to be recorded. Okay, not okay? Okay. In this, in total, you have 1, 2, 3, 4, 5. How many columns? 5 columns. How many columns? 5 columns. Open your mouth and respond. How many column? 5 column. First column, date column. Why date is important? If you write a transaction without date, Abdina, I will not know when this transaction is taken place. So now, for example, today is 25th April. I want to go and check some transaction on, let's say 25th April 2025. On that day, what and all transaction took place, Abdina, without date, can I find out? Not possible. If date is not there, for me, searching a transaction becomes very difficult. Got it, not got it. So date is very important to know that on what date the transaction is taken place. Okay, not okay, okay. In particulars column, we record the name of the account. What do we record? Name of the account. For example, I gave 1 lakh as capital to Kalpabrish Academy. Who am I? Owner. So what is the entry Kalpabrish Academy will write? Bank account debit to capital account. So here what will come? Bank account. Bank account. You have to mention A bar C compulsory. DR stands for debit, not debtor. To capital account. So here bank and capital is what it is. It is account. What it is? Account. So in particulars column, what do we record? Account name. Which account should be debited will come in the first line. Which account should be credited should come in the second line. Got it, not got it. And all the items to be debited is there. No, you should start from the margin. Let's say this is margin line up Tina. From margin you will start. All the debit items will be starting from margin. Credit item, don't start from margin. From margin give a gap and then start it. And how do you write it? To account name. To account name. Either format which is followed universally. Means what? Worldwide, this is what is being followed. Can you change the format? You're not allowed. Got it, not got it. Okay, not okay. Okay. Whatever you write in the first line, the debit part, the amount of that will go to debit column. And whatever account you credit, that amount will go in credit column. Got it, not got it. Clear or not clear? Okay. Then comes in between one useless column called as LF column. What is LF ka full form? Ledger folio. Today it is outdated, but this was very relevant in the olden days when we are doing manual accounting. When we did manual accounting, that time it was very important. For example, cash ledger, cash ledger, the T-shaped ledger. Every ledger will have one book. For every ledger, we had one book. For example, in 12th, you had accounts ka book. Accounts ka note you had. For state board people, I'm sure you had accounts ka notebook with columns or rule sheet you had. State board people. Columns, you had columns, no? Correct. In the original life also, people back, let's say 20, 30, 40 years ago, they had proper column-based ledger book. Separate ledger ki tani book varum. In CBSE, you follow normal rule sheet. So for you, it feels that, okay, what is a big deal? Later. But in state board, when I was also doing accounting, no, we had separate account sheet. In today also, if you go to any stationery, ask the shopkeeper, can you give me accounts ka rule sheet, accounts sheet? He'll have a separate account sheet, which has got inbuilt column in it. So that kind of books people were using. So problem is, for bank, there are multiple books. Because when one book, all transaction cannot be recorded, no. Or business la, cash and bank transaction adhigama irukum. Nariya transactions irukum. So one book is not sufficient. So depending on your size of the business, people used to have 2 book, 3 book, 4 book, 5 book, 10 book, 20 book of cash. Apo, this cash account what you debited, no, is gone to which book? How will I know? In the recording, this journal, in book, which book have you posted? How will I know? So for that, they used to give a ledger folio number. If I have 15 cash book, this on 25th June 2019 is gone in which book? It is gone in book number 4. So if in the posting, in the journal, in which ledger it is posted, if I have to see, I will go and search this 4 number book. I'll take the 4 number book and see whether posting is done properly or not. So in the column is nothing but a cross-referencing column. From journal to which ledger book it is posted, cross-referencing we give it. Got it, not got it. But in today's scenario, since everything is computerized accounting, this column is mostly going to be omitted. Got it, not got it. But since you are doing manual accounting and examination, you have to write this LF column. But in CA Foundation, CA Inter and CA Final, even if you skip LF column, you will not get your marks deducted. They will not deduct the marks. So you can skip also. Okay, not okay. Clear or not clear? 3 hours. Paper complete பண்ண முடியாது. இதுல formatல வந்து உட்கார்ந்தோம் முடிஞ்சது. So ICA is not very particular with LF column at least. But rest of the column you have to draw in. But you can't take your own sweet time to draw the columns because we are having a very short time. We're having a very short time. So tuck, you have to draw. You can't take your own sweet time, slowly measurement. Boss, no time. You have to be very, 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 very fast. I'm telling you, some people, I've seen papers for journal, ledger, they don't even draw the T-shape format or any format. They just write income neatly. Sometimes ICA for that also they give marks. In the absence of format also they give marks. But don't take that risk. Because the person who's correcting the paper, with what expectation is correcting, we don't know. Some paper might be corrected leniently in terms of format. Format பொறுத்த வரைக்கும் சில evaluators could be little lenient, but not all of them. So let's not take that risk. Let's not take the risk. We'll draw the format, but we'll draw it very fastly. We'll not take own sweet time. Tuck, 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 we'll draw. Okay, not okay. Okay. And below that, you have to give a narration. So are you now clear with what is journal? Are you all of you clear with this journal now? Okay. Can we go to the sum? Super. Journalize the following transactions. The process of writing journal entry is called as journalizing. The process of writing a journal entry or recording a journal entry is called as journalizing. Also, state the nature of each account involved in the process of recording the journal entry. Nature of each account as per what? Golden rule or golden rule or modern rule? They have not mentioned. In exam, they'll mention. Here, they have not mentioned, but in exam, they will mention. Got it, not got it. So we'll do this as per golden rule. Got it, not got it. Okay. Following figures are given in hundreds. அப்படின்னு சொல்லியிருக்கான். ஆனால் 4 lakh ஃபுல்லாக கொடுத்துருக்கான். லூஸ் விட்டுருக்கேன். நமக்கு என்ன? We'll do it. December 1, 2022. December 1, 2022. Ajit started business with a capital of 4 lakh rupees. Who is Ajit? Owner, also called as sole proprietor. Single owner is called as sole proprietor. Got it, not got it? Okay. He started business with a capital of 4 lakh rupees. Means what? He's got some business. Business name mentioned பண்ணல. Generally, they mention the business name. For example, Messrs. XYZ. Something they'll mention. They've not mentioned it. It's okay. So this Ajit is given capital to the business. So now we are recording from whose point of view? Ajit's point of view. Very good. Who's that? Who said Ajit's point of view? It's not from owner's point of view. Always from business point of view. Got it, not got it? Okay. If you look at the heading, they have just put journal. We are supposed to write in the books of Ajit. Now here by Ajit, we don't mean owner. Ajit here means business. Got it, not got it? General business name கொடுப்பாங்க. இங்க கொடுக்கல. So Ajit and Co or Ajit itself is considered as business name. Got it, not got it? So when I see in the books of Ajit, don't think we're recording from owner's point of view. We're recording from business point of view. Now Ajit is given money to whom? Ajit is given money to whom? Business. Okay, not okay? Okay. First, accounting is a systematic process. Now we're following the system. What is the first step? Accounting is a systematic process of identifying a business financial transaction. First of all, is this a transaction? What is a transaction? Exchange of goods, service, or funds between two parties, in which one is business, another is third party. One is business, another is third party. Can I say one is business, another is Ajit, another party? Okay, not okay? Is this a transaction or not? Yes. In this transaction, what is getting involved? Exchange of goods? No. Exchange of services? No. Exchange of funds? Yes. Funds is getting exchanged. Rather transferred, not exchanged. Fund is getting transferred. So it's a transaction. Is this transaction having a financial value? Yes. Is this happening in the course of business? Is this happening in the course of business? Yes. So is it a BFT or BFE? BFT. It's a BFT, business financial transaction. Super. Second, measurement in terms of money. What does measurement means? It should be in INR. It should be in INR. Is it in INR? Yes. Now, recording through journal. Recording through journal. For recording, what is the first step? Identify the accounts involved. Identify accounts involved. How many accounts are involved here? How many accounts are involved? Which two accounts? One is capital. Second is money. Ajit started business with capital of 4 lakh rupees. Means what? He has given 4 lakh rupees either in cash or bank. In CA Foundation, whenever the question is silent about whether the money dealt is with cash or bank, always you'll assume bank. In foundation it is bank. What is in 11th state board? Cash. But here it is bank. Will you remember this? Yes. So one is bank account. Second is capital account. Any problem? No problem. Now, once you identify accounts, what is the next rule? No, before applying rule. Classify the nature of accounts. Classify nature of accounts. Bank is what classification? Bank is asset. Bank is asset. Capital is liability. We can say internal liability. Okay. Once you classify it, now you're supposed to apply the rule. Which rule are we applying here? Golden rule. As per golden rule, all the assets should come to real account except bank, debtor, bills receivable, prepaid expenses, accrued income. A bank is asset, but bank is coming under exclusion. So bank, if excluded from real account, then where will it go to? Personal account. Personal account, which personal account? Artificial personal account. Got it, not got it? Okay. Capital. What classification? Capital is liability. All liabilities will go to personal account. In personal, which personal account? Natural personal account. Because this capital is contributed by whom? Human being. Ajit is a human being. So Ajit is a natural personal account. So this is also natural personal account. Got it, not got it? Whenever we talk about the rule applied from personal account point of view, whose point of view should we see? Third party point of view. So here we have bank. So banker's point of view, receiver or giver? Banker is receiver or giver? Donkey fellow, bank apnina. Whose bank account? Business bank account. If Ajit is giving money to bank, banker is receiving money. Banker is receiving money. From banker's point of view, third party point of view, banker is receiver. So debit the receiver. Debit the receiver. Bank will be debited. Capital, Ajit point of view. Not business point of view. Opposite person point of view. Ajit point of view. Ajit is giver of capital. Giver of capital. Credit the giver. Credit the giver. Got it, not got it? Okay, not okay. Now tell me what is entry now. Bank account debit to capital account. So please take a fresh page. Serial number. You can write first column. Optional. Date is mandatory. Right? Date column. Particulars column. Now here, listen. One second. Nature of account generally does not come. But when will it come? The question says that I want the nature. In the account column. If they ask only journal entry, nothing else, this column will not come. Got it, not got it? But here the question specifically said that we want nature of each transaction as per golden rule. As per golden rule. So therefore, one extra column will come, which is nature of account. Then LF column, debit, rupees, credit, rupees. Sometimes people don't write rupees here. You will get 0 mark. So debit below that rupees is compulsory. Credit below that rupees is compulsory. Please write down the format. First heading should be journal. I'm coming. I'll tell. I'm not putting LF column. You can put it. What is the date? 1, 12, 22. So what is debited? Bank. So bank account space, give some space and write DR. Second line, when you credit it, give some space and write to capital. Now the question is, sir, can we write just to capital, or if should we write to Ajit's capital? Both are allowed. Both are allowed. When you prepare accounts for a sole proprietorship concern, you can just write capital account and also leave it, because capital here means owner account. Since only one owner is there, even if you don't write the owner's name, I will know it is Ajit's capital. If you want to write Ajit's capital also, nothing wrong in it. So accounting rules are not hard and fast in this case. You can write both, either just capital account or Ajit's capital. Both are allowed. Okay, bank is what, people? It is personal account. Now, when they ask just classification, write personal account income. No need to specify natural, artificial, or representative. If you know the answer surely, then write that answer income. Got it? Not got it? உனக்கு ஷியோரா டிஃபரன்ஸ் பண்ண தெரியுது whether this is natural, artificial, or representative, give that bifurcation. If you're not sure, just write personal account and income. In this case, are we sure? Yes. What is it? Artificial personal account. Capital is natural personal account. Any problem? No problem. Amount is how much, people? 4 lakh rupees. So debit will go to debit column, debit account will go to debit column, and credit account will go to credit column. Any difficulty? Any difficulty? Whenever in a journal entry, one debit account is there, another credit account is there. That type of journal entry is called as what? Double entry. Wrong. Very good. Simple journal entry. So this comes to the different types of journal entries. First is called as simple journal entry. What is it called as? Simple journal entry. It involves only one account in debit and only one account in credit. Upon a simple journal entry. Okay, not okay. Sir, is it possible to have more than one item in debit and more than one item in credit? Possible. That kind of entry is called as compound journal entry. Compound journal entry. A compound journal entry is a journal entry in which more than one account is debited or more than one account is credited or both. அப்படின்னு என்ன? Cash account debit, bank account debit, to capital account. This is one type of compound journal entry where we have more than one account in debit and only one account in credit. Okay, not okay? Okay. Capital account debit, to cash account, to bank account. Okay, not okay? In this, we have only one account in debit and two account in credit. So a compound journal entry is a journal entry where we have two or more items, more than one item in debit or more than one item in credit. Or both means what? This third type of journal entry where we have multiple debits, multiple credit, multiple debit, multiple credit. Example: cash account debit, bank account debit, to capital account, to creditor account. We do an entry called as opening journal entry. In opening journal entry, this entry will pass. So more than one in debit and more than one in credit. Got it? Not got it? These are the maximum 3 types of journal entry under compound journal entry. Got it? Not got it? So what is compound journal entry? Where we have more than one account in debit or more than one account in credit, or in both debit and credit we have more than one account. That is what is meant by or both. Means what? In both debit also more than one is there, credit also more than one is there. Got it? Not got it? Okay. Instead of passing multiple separate entries for related transaction, all the effects are combined into one single consolidated entry. Instead of putting multiple entries, we combine them into one single entry. It involves more than one account in debit or more than one account in credit or more than one in debit and more than one in credit. So 3 possibilities are there. 3 possibilities are there. Got it? Not got it? Clear or not clear? Okay. If this part is clear, can I go to the next point? Online people, if this point is clear, can I go to the next point? December 3rd, he withdrew cash for business from bank 2,000 rupees. My question to all of you: is it a business financial transaction or is it a business financial event? How do you say transaction? This is a transaction between business and bank. It's a transaction between business and bank. What transaction? Exchange of goods, service, or transfer of funds? Transfer of funds. So it's a transaction. Whether this is having a financial value to it? Yes. एवढा आउटसाइड और बाहर है कि पीछे है? यहाँ पे क्या? ये पीछे निवास भी है? सामने से आ रहा ना? somebody seen come no? உங்க போற மாதிரி இருக்காங்களா இல்ல இங்க இருக்கிற மாதிரி இருக்காங்களா? नहीं जाने वाला है. They are moving. क्या कहा जाए आपने? One second, people. Too much of noise is going outside. உங்களுக்கு அது மேபி கேட்காம இருக்கலாம் because I have put a noise cancellation, so you might not be able to listen to it. Moving है क्या? शादी लग रहा है क्या? मेरी बारात भी ऐसे ही गई थी घूम के। तब तो तू पहचान नहीं थी ना, अब बुला लूंगा वापस। नहीं, वापस मैम से दोबारा जब शादी करूंगा तब बुलाऊं। नाइस सॉन्ग इज गोइंग ऑन। निवास में नहीं, इट इज ऑन रोड। दे आर मूविंग। Ask them to move a little fast, no? நீ போற, நானும் வர பின்னாடி. வராதா? லஞ்ச் இருக்கு அப்புறம் கண்டிப்பா. நைஸ் லஞ்ச் will be there. We'll do one thing. We'll take a break of 5 minutes. Let them pass by, then we'll resume. Take a break. Chalo people, let's continue. So what are we discussing before break? Transaction we confirmed. Okay. Financial, money is involved. Is it happening in the course of business? Yes. It's a business financial transaction. Measuring in terms of money, it should be INR. It is INR. Got it, not got it. So can we record this now? Since it's a BFT, can we record? Yes. To record, we have to identify accounts involved. So how many accounts are involved? One is bank. Second is cash. Understand what is happening. I'm withdrawing money, which is cash, from the bank. I have to pay cash to some labor. I don't have money in hand. But where is money there? In business. Where? In the bank account. In the bank. So bank, I'm withdrawing money. So what happens? Bank balance will reduce. Cash balance will increase. So you have to understand that if I do a transaction, it has impact on which account. புரியுதா? ஒரு transaction if I'm encountering means this is having impact on which account, that you have to understand and you have to envision it. That will come with practice. Got it, not got it? Okay. So one is cash, second is bank. Now please tell me, what is the classification as per golden rule? Cash அப்படிங்கிறது என்னது first? Asset. Bank அப்படிங்கிறது என்னது? Asset. All the asset come to my house except bank, debtor, bills receivable, prepaid expenses, accrued income. அப்ப cash is coming under exclusion? No. அப்பனா cash க்கு வந்து real account. Cash க்கு real account. What is the rule of real account? Debit what comes in, credit what goes out. If I withdraw money from bank in cash, if I bring that cash inside the business, money is coming in or going out? Coming in. Debit what? Comes in. Debit what? Comes in. Bank is asset though, but it does not come in real account because it is excluded. So it goes where? Personal account. Which personal account? Artificial personal account. Now from banker's point of view, whether he's giver of money or receiver of money, he's giving the money, we are receiving the money. From his point of view, he's the giver. Debit the receiver, credit the giver. Giver வந்து credit பண்ணுங்க. Okay, not okay. So what is the journal entry? Cash account debit to bank account on 3rd December. December 22. Cash account debit to bank. What is classification for cash account? It is real account. And for bank, it is artificial personal account. Amount, please. 2,000. Narration, what will you write? Being cash withdrawn from bank. Being cash withdrawn from bank. This is the right statement. Being cash withdrawn from bank. Simple English is more than sufficient. Everywhere they have started the journal with being. Okay, wow. In your school, your teachers might have given the freedom that even without using the word being, you can write the narration. Allowed, but that is not as per accounting, it doesn't allow. Accounting says that you have to start a narration in professional language, which is with the word being. So new narration start பண்ணீனா அதுக்கு முன்னாடி வந்து the word that has to be prefixed is being. Being business commenced with capital. This you can write in any simple plain English language. No need to by heart. Simple language. Being business started with capital. Being business commenced with capital. Being the capital contributed by Ajit. எப்படி வேணா இருக்கலாம். Simple plain description is more than sufficient. Being cash withdrawn from bank. Now the question is, sir, if I don't write being, will we lose mark? It depends. Mostly your mark should not get deducted because of this reason. But the person who's correcting the paper is coming with the traditional mindset that no, being should be there apnina, he'll rip you apart. So we will not take that risk. Because the person who's correcting the paper is a chartered accountant. Maybe a young chartered accountant or old. Young people, they can compromise. Okay, pathakalan solid. Old ones apnina, they're very strict that ilpida irukonu அப்படிங்கிறது இருப்பாங்க. So you never know who's correcting the paper. So to be on safer side, better write it what is being given in the institute. Language has to be maintained. Got it, not got it? Okay. Now tell me people, for first two transactions I went very slow. Now can I speed up? Without discussing BFT, monetary terms, what classification, directly can I do the entry part? Okay. December 5, he means what? Ajit means business. Purchase goods by making payment through bank 15,000. So what transaction this is? It is called as purchase transaction. What type of transaction? Purchase transaction. Okay. Whether this is cash transaction or credit transaction. What is cash transaction? I'm buying something. Immediately I pay. Purchase cash transaction. Cash purchase transaction. I buy now. I'll pay later. This is also purchase transaction. Ana credit purchase transaction. Credit purchase transaction. Got it, not got it. I sell the product now. I sold the product now. Immediately got money. Sale. Which sale? Cash sale. I'm getting money immediately. Cash apnina, don't take literally cash only. Cash means money. So it is cash transaction. Which cash transaction? Cash sale transaction. Na sale பண்ணிருக்கேன். பணம் immediate வந்திருக்கு. It's a cash sale transaction. Or I sold the product. I'll receive the money in future. It is a sale. It's a sale transaction. But did you receive money now? No. It's called as credit transaction. Any money that you receive in future is called as credit transaction. Got it, not got it? This is what transaction? Cash purchase transaction. Sir, but money is coming through bank. No, are donkey fellow. Cash here doesn't mean cash. Cash includes bank also. Got it, not got it? So this is cash purchase transaction. Now tell me, in this, how many accounts are affected? 2 accounts affected. Which all? Sir, if I purchase goods up, it is my expenditure. I should record my expense. And second, I made the payment from bank. So my bank balance will reduce. So rent account will effect kudukunolla. So I have to give effect in both the places. So one is purchase account. Second is bank account. Okay. Tell me people, purchase is what classification? Before that. Purchase is expenditure. All the account which has got the flavor of expenditure, you'll come to my account. Who am I? Nominal account. The expense is nominal account. What is the rule for nominal account? Debit all expense and losses, credit all income and gain. Any problem? No problem. Next is bank. Bank is what? Artificial personal account. Bank is artificial personal account. Debit the receiver, credit the giver. On your behalf, banker is giving money to the, what do you call it? Seller. You are the buyer. So vendor வந்து யார் pay பண்ற? Bank is paying. Debit the receiver, credit the giver. Banker is the giver of money. From bank money goes out means banker is giver of money. So it is first bank is asset. Next is artificial personal account. And then is credit the giver. So what is the journal entry? Purchase account debit to bank account. Very good. What date it is? 5th. Third transaction, 5 December 22. Purchase account debit to bank. Being goods purchased for cash. Cash apnina bank here. Nominal account, artificial personal account. Amount is 15,000. Any difficulty here? Online people, any difficulty here? Next, December 8, he means business. Ajit sold goods 16,000 and received payment through bank. Which accounts is affected? Sale account, Sale account because I have to record my income. Bank because I got money in my bank account. So sale and bank account is affected. Anybody's got any problem? Sale, what classification? Income you say or revenue you say, both are correct. Don't say gain. It is income. Income and gain, like small difference. What is income? When I put effort and earn something, that is called as income. When I gain something effortlessly, for example, I went to mall, I purchased goods for 10,000 rupees. He gave me a discount of 2,000 rupees. So how much did I pay? 8,000. So effortlessly you got 2,000 rupees ka gain, advantage. That is called as gain. So gain is something which you get effortlessly in the business. Whereas income, you get it by putting some efforts into it. So for example, I'm teaching all of you. I'm getting fees from all of you. Is fees my income or gain? It's my income because I'm putting effort for it. So anything which comes with effort is called as income. Anything which comes effortlessly, that is called as gain. Got it, not got it? Okay. So sale is income. Income is also called as revenue. Income is also called as revenue. In modern rule, we'll term it as revenue. All the account which has got the flavor of income should go to nominal account. And what is nominal account rule? Debit all expense and losses, credit all income and gain. Bank is asset. Artificial personal account. Debit the receiver, credit the giver. Am I receiving the money? I sold the product. Money yen kaila vanducha? Did money come to my account? No, it went to the banker. In bank, I have my account. So it went to the banker. So who collected money on my behalf? Banker collected. Debit the receiver. Debit the receiver. On your behalf, banker collected the money. Debit the receiver. So what is the journal entry here? Bank account debit to sale account. 8/12/22. Bank account debit to sale. Bank is artificial personal account. Sale is nominal account. Amount please. 16,000. Guys, we have only one question based on golden rule and one question based on modern rule. Is this one question sufficient to become pro at it? No. Hence, I told all of you to follow one book. I give you an extra book called as TSG. In that, you have to follow. I mean, if you go to journal chapter, there are multiple questions, varieties of questions, super variety. All that question you have to practice because from that also questions can come. It has come in past also. When I take BRS, rectification and bills of exchange, I will prove it to all of you how the questions have come from TSG. Got it, not got it? So TSG book is your Bible. You cannot miss it. Got it, not got it? Got it, not got it? In TSG book, you have to work out the journal entry in the same manner how I'm working out right now. Ask yourself what classification அப்படிங்கிறது initial ஒரு 5-6 questions அப்படி practice பண்ணுங்க. போக போக subconsciously will be answering it. So that concept gets registered in your mind directly. So but initially for 4-5 questions, the way I'm teaching right now, that is how you have to practice also. Got it, not got it? Okay. Hitash, don't go forward. Do it with me. तेरा चेहरा देख के समझ गया था मैं तो आगे जा रहा है. Now December 10, he purchased furniture and paid by check 2,500. How many accounts are affected? One is furniture account. Second is check account. Check where will you put? In bank. So ultimately, which is getting affected? Bank is getting affected. So one is furniture. Second is bank. Furniture is what classification? Anything that I own in the business. In the business, the chair what you're sitting is my furniture. Furniture, I own it. Anything that I own is asset. So furniture is asset. All the asset will go to real account except bank, debtor, bills receivable, prepaid expenses, accrued income. In the 5 exclusions, furniture vandirukka? No. Is furniture come in the exclusion? No. So which house furniture will go? Real account. What is the rule? Debit what comes in. If I buy the furniture, furniture will come inside my business. Debit what comes in. It is coming inside the business. Got it, not got it? Okay. And for this, I paid a check. So bank is asset. Asset is artificial personal account. Banker is giving money on your behalf. Credit the giver. Credit the giver. What is the entry? Furniture account debit to bank. Do it fast. Furniture account debit to bank. Next, can we do? December 12, he sold goods to Arvind 2,400. He sold goods to Arvind 2,400. Now, whether this is cash transaction or credit transaction. We sold the goods, but did we receive money or not? It is not mentioned. So whenever the question is silent about the receipt of money, whether received or not, we always assume that it is not received. Upon what transaction this is? This is a credit transaction. This is a credit transaction. You see above, purchased goods by making the payment. Upon this is cash transaction. Sold goods and received money. Upon this is cash transaction. If there is no information about whether the money is paid, received in the information, we will assume this as credit transaction. Got it, not got it? Okay, not okay? Okay. How many accounts are affected? 2 accounts. One is Arvind account. Second is sale account. Why Arvind account? Because I need to remember this. Sorry, I need to remember that I have to collect the money from this person. Correct? No. For example, you go to any nearby, like when you go to your house, nearby your house, I'm sure all of you have petty shops. We'll say petty shop, buy kade. Yes or no? Whenever you go and buy any product from that shop, and if that shopkeeper knows you for a long period, let's say today itself, while going back home, you want to take a 10 rupee chocolate, but in pocket, paisa not there. So what will you say? Anachi, give me one chocolate. I'll pay later. I'll pay later. So what will he do? Immediately make a note in the book. Why is he making a note in the book? Because next time he has to remember to collect money from you. We'll forget. No, we are Gajini people. We are Gajini. We'll forget everything. So we have a habit of making a note of it. If he's giving a chocolate against cash, he will not make a note. Because paisa came, what to note it down? What to write? Nothing, he will note it down. But whenever he does a credit sale, he'll make a note in his textbook that from this person I have to collect 10 rupees. From that person I have to collect 100 rupees. Like that, he has to make a note. So like that, we are also making a note to collect money from Arvind, or else we will forget it. How many things can you put in a memory? Not possible. So we need to remember to collect money from Arvind in future. So Arvind for business is income, expense, asset, liability, capital. What is his classification? Arvind in business will be technically termed as debtor. What is he called as? Debtor. Who's debtor? Debtor is customer for the business. Who's debtor? Customer for business. Which customer? That customer to whom we have sold the goods on credit. Got it, not got it? So for example, I sold the product to you and you gave me the money immediately. Will I call you debtor? No. You're just a normal customer. But debtor, when the concept comes into picture, only on a credit sale. Credit sale means what? I sold the goods now. I'll collect money later. That time the customer becomes my debtor. Terminology becomes debtor. Okay, not okay? Okay. Debtor is what? Asset. Why it is asset? Anything that we receive in future is asset. So from Arvind, we have to receive money in future. By that virtue, Arvind is my debtor. Arvind is my asset. Which classification? All asset will go to real account except bank debtor. Debtor is excluded. Appa debtor enga pogum? Personal account. Now Arvind is natural or artificial? Natural. So this is natural personal account. Okay, not okay? So from Arvind's point of view, is he receiver or giver? He is receiver of goods. If I give goods, Arvind is receiver. Always personal account from whose point of view? Receiver's point of view. So Arvind is receiver of goods or seller of goods? He is receiver of goods. Debit the receiver. Debit the receiver. What happened, Mana? No doubt? Okay. Debit the receiver. Debit the receiver. Any problem? No problem. Sale is nominal account. That is income. Sale is income. Sale is income. Please write it. Income is nominal account. What is the rule? Debit all expense and losses. Credit all income and gain. Credit all income and gain. So what is the journal entry? Arvind account debit to sale account. Arvind account debit to sale account. Arvind account debit to sale account. Being sale of goods on credit or being goods sold on credit. Being goods sold on credit. Personal account, Arvind. Which personal account? Please make a note. Natural personal account. Sale account nominal 2424. Slightly I'm increasing the pace now. December 14. He purchased goods from Amrit 10,000. He means what? Business. Business purchased goods from Amrit 10,000. Paisa paid or not paid, the question is silent. What transaction this is? Credit purchase transaction. Credit purchase transaction. Ishan video please. Harini, Runetra video. Taran Siddharth, Sailesh video. How many accounts are affected? 2 accounts affected. One is purchase account. Second is Amrit account. Why purchase? Sir, expenditure, sir. In a business, recording expenses is important or not? ஒரு பிசினஸ்ல வந்து to record expenses is important or not? Why it is important? Very good. Expenses will help to reduce my profit. Imagine பண்ணுங்க, you're just recording income. Okay, no expenses. அப்போ your profit will be high. Profit higher இருந்தா you have to pay more tax to income tax department. So to pay less taxes, expenses are very, very important. Got it, not got it? So purchase is my expenses. If I record these expenses, my income will reduce, my profit will reduce. So the tax that I pay will be perfect, proper tax. Got it, not got it? Okay. Purchases, expenditure. All the expenses will go to nominal account. What is the rule? Debit all expense and losses. Debit all expense and losses. Any problem? Online people, any problem? Okay. Who's Amrit? Amrit is that person to whom I have to make the payment. When will I pay it? In future. So Amrit is my liability. Liability. What liability? External liability. But just like that, if you say liability not sufficient, no, you have to give a name to this liability holder. So what will we call him as? Creditor. Creditor. Upon a creditor, yaar, supplier. Supplier, another name is vendor. Vendor or supplier from whom I'm buying the goods on credit is called as a creditor. So creditor means vendor or supplier. Debtor means customer. Debtor means customer. Creditor means supplier or vendor. Debtor means customer. So Amrit here is supplier or vendor from whom I'm buying the goods on credit. So we will call him as creditor. We will call him as creditor. Creditor is what classification? Liability classification. All the liability will go where? Personal account. So which personal account is this? Amrit is a natural personal account. Liability, this is natural personal account. Tell me from his point of view, Amrit point of view, is he a receiver or giver? He's a giver of what? Amrit is giver of goods. In the transaction la enna pesrom? Goods pati pesrom. In this transaction we're talking about what? Goods. So credit the giver. Opposite party point of view, Amrit is a giver of goods. Credit the giver. What is the journal entry? Purchase account debit to Amrit account. Very simple. Purchase account debit to Amrit account. Purchase is nominal. Amrit is natural personal account. Please write it natural personal account. Being goods purchased from Amrit on credit. Being goods purchased from Amrit on credit. Can I go to next point? December 15, he returned goods to Amrit. This is jackpot question. I'll tell you why it is jackpot. Maja will come here. Very good. But that is not the kick here. Kick is something else. Golden rule does not apply. Very good. Killadishis. Okay. December 15, he returned goods to Amrit. He means what? Business returned goods to Amrit. In the previous transaction, December 14, we have purchased goods from Amrit for 10,000. In that, 500 worth of goods is returned. Reason can be anything. That 500 worth of goods, we did not like it. It was not as per our specification, so we gave it back. Maybe it was damaged, we gave it back. So many times you order from Flipkart, Ajio, Myntra, what is it next? Amazon, etc. When you don't like it, you return or not return. Sometimes the whole transaction you return, or sometimes a part of it you return. Yes or no? Okay. So any reason could be for purchase return. Okay. Tell me one thing. How many accounts are affected here? How many accounts are affected here? 2 accounts. Which is one account? One is Amrit. Second is purchase. In the previous transaction, December 14 transaction, you recorded a purchase. You recorded an expenditure. What is your expenditure? 10,000. Income tax department says that this 10,000 can be claimed as expenses provided the entire purchase ka bill, entire purchase ka product is with you. In the next transaction, out of 10,000, 500 worth of product we have reversed it. We gave it back. Apana, what is my net expenditure? What is my net expenditure? 9,500. But நீ எவ்வளவு ரெக்கார்ட் பண்ணிருக்கீங்க? You record 10,000. Let me open this document. One more, please. In the purchase account, You have recorded an expense of 10,000 rupees. Your expense of 10,000 is correct. Is this expenditure of 10,000 correct or not correct? It is not correct because your real expenditure is how much? 9,500. Because out of 10,000 worth of product, 500 worth of product you have returned. So what is your net expenditure? 9,500. Appo இந்த இடத்துல வந்து பாத்தீங்கன்னா I should have 9,500. So can I go and cut it and put 9,500 here? In accounts, it is not allowed. In accounts, this is not allowed. ரெண்டாவது, this is happening on a different date. This is happening on a different date. You cannot go back and fiddle with the previous entry. Got it, not got it. So you have to pass a separate entry in such a way that when I combine both the entries, my net purchases should be how much? 9,500. Got it, not got it. Okay. So I need to reverse my purchase. Reduce my purchase. Yes or no? I have to reduce my purchase. Okay. Likewise, why is Amrit account important? In the previous transaction, you promised that you will pay Amrit 10,000 rupees because you got 10,000 worth of product. Credit in Amrit account means it's a promise that Amrit, I'll pay you 10,000. Will you pay 10,000? Will you pay 10,000? No. Why? 500 ரூபாயோட பொருள் ரிட்டர்ன் பண்ணிட்ட பண்ணி when you've returned 500 worth of good, when you're enjoying 9,500 worth of product, will you pay 10,000? Which donkey fellow will pay 10,000 and enjoy 9,500 ka product? Ulta is possible. Correct, no? But I will not do that way. Take 10,000, but I will enjoy for 9,500. Not possible. So I need to reduce the liability of Amrit also. Yes or no? Okay. Now, two accounts affected, Amrit and purchase. Amrit, what classification? Sir, Amrit is a creditor. Creditor means liability. All the liability will go to natural personal account. Natural personal account. Debit the receiver, credit the giver. In this transaction, what are we dealing with? Goods. Amrit, personal account, from whose point of view? His point of view. Amrit point of view. Receiver or giver? Receiver of goods. Debit the receiver. He is a receiver of good. I will debit him. Okay, not okay. Okay. Okay, not okay. Okay. Purchase. Purchase. Which account? Nominal account. Purchase, nominal account. All the nominal accounts will go where? All the nominal accounts will go where? Sorry. Purchase. Sorry. Nominal. Nominal. Nominal ka what rule? Debit all expense and losses. Credit all income and gain. இப்போ இந்த பர்ச்சேஸ்ங்கிறது should I debit or credit? Should I debit or credit? Sir, what sir? This is purchase return, no sir. Why you put purchase? I'll come to that. Both are allowed. Two purchases கூட போடலாம். Purchase return கூட போடலாம். When you will put purchase return, I'll discuss right now. Both are allowed. If you're not happy with purchase, no problem. Let me put purchase return first. Then I'll come back to purchase little later. Let me put purchase return for your satisfaction. Purchase, I'll come back a little later. Purchase is what classification? Nominal account. Appo purchase return is what classification? Same nominal da. All the accounts which comes under trading and P&L account is nominal account. Appo purchase is inga povum. Those who did final accounts in 11th and 12th, where does purchase go in final accounts? Trading account. Where does purchase return go? Trading account. So anything which comes in trading and profit and loss account will be a nominal account. So purchases, purchase return, both are nominal. Yes or no? Okay. Amrit debit panta apnina, kandipa purchase return is credit. Yes or no? Amrit, what are you debiting? Sorry, what are you doing here? Debiting Amrit. So one debit apnina, opposite will be credit. My simple question. Purchase return, you're telling nominal. You're crediting also. Apana, what is the classification? Credit all income and gain. Credit all income and gain. Appo income and gain indha mattum dhaan neenga credit பண்ணுவீங்க. When do you credit in the nominal account? When it is income and gain. In the angle இது வந்து income and gain. In which angle this is income and gain for you? Simply I'm asking one thing. This product and this product, both I purchased together for 10,000 rupees. I saw this is super. How much is this? 9,500. This is okay. How much is this? 500. This 9,500 I'm keeping with me. 500 I'm returning. 500 ka product I'm returning. When I return the product 500, what will I get? Money 500. This money what I'm getting now, whose money it is? My money only, no? I only gave you 10,000 rupees. நான் தான் பர்ச்சேஸ் பண்ணும்போது 10,000 கொடுத்தேன் உனக்கு. இப்போ நான் அதை வாங்குறேன். என் பணம் தான் திருப்பி எனக்கு வருது. My money is only coming back to me. Is it income for me? When my money is coming back to me, is it my income? When my money is coming back to me, is it gain? Upon what basis did you record credit here? Look at the entry. The entry is Amrit to purchase return. Purchase return you have credited, saying it is nominal account. When do you credit in nominal account? Debit all expense and losses. Credit all income and gain. அப்போ இது income and gain நினைச்சுதான் credit பண்ணீங்க. Tell me where this is income and gain. Why didn't you ask this question to your 11th standard teacher? Tell. Here, golden rule is not applicable. Like that, in multiple places, I'll prove. And those who did already 11th and 12th with me, so many transactions have proved already why golden rule is not applicable in many places. That is the reason why they came out with modern rule, no? Or else, what is the necessity for modern rule, boss? If golden rule can give solution for all the journal entries, why did modern rule come into picture? Not required. But still it came because everybody knew that in golden rule, all the entries cannot be classified or given a debit credit properly. Got it, not got it. But still we are doing this. Okay, not okay. So in this case, I will not apply golden rule. What do I apply, Modern rule. So modern rule வந்து in-depth explanation கொடுக்கிறேன். இங்க வந்து how do we apply, Purchases expenditure. Yes or no? To increase expenditure, debit. ஒரு expense increase பண்ணோம்னா modern rule says debit. To decrease expenditure, credit. Decrease means minus, give a credit. Increase means add na debit. Decrease means minus, means credit. Got it, not got it. So here we'll apply modern rule. In modern rule, I'll talk about this a little bit more in depth. Okay, not okay. This was the solution. Why purchase return is credited. What is the problem with golden rule? That I also gave you explanation. The next problem is, sir, how did you say 2 purchases will come? From 11th till now, we studied whenever the goods are returned, only purchase return should come. Only purchase return should come. How dare you said, sir, 2 purchases can come? How many of you have doubts in this question? I said 2 purchases, right? Allowed up. But for you, it is a shocker because you're listening to the statement for very first time. Yes or no? Correct? Why? When I purchased the goods, the entry was purchase account debit to Amrit. When I returned it, there are 2 types of entry we can write. One is Amrit account debit to purchase return, or we can write Amrit account debit to purchases. In this both, which is correct? Which entry when we have to follow? Both are correct, but which entry when to follow? We have to decide. Second, as long as the transaction with Amrit is concerned, Amrit account you created the entry and you reverse the entry in the same Amrit account. Creation and reversal is happening in both accounts. Whereas for purchases, creation is happening in purchase account, reversal is happening in purchase return account. Why didn't you put purchase here? This doubt should have come to you in 11th. So listen to me. For that, I'm giving you explanation. Both are correct. Both are correct. I will follow Amrit to purchase return in those scenarios where in my business, the purchase return transactions are numerous. When we have many purchase return transactions. ஒரு businessல if you have numerous n number of purchase return transactions, to track those purchase returns separately, we will route them through purchase return account. On the other hand, if I'm doing such a business where purchase returns are very negligible, very limited, negligible purchase returns appadina, I will reverse the purchase return in the purchase account itself. When we have almost or very limited purchase return transactions, we follow the entry Amrit to purchase. Now, except science people, everybody else will understand the next point. You may understand, you may not understand also. Okay, va? But all the other people, since you know ledger, you'll understand properly. So can I show the ledger presentation? Please tell me, what is the posting in the purchase account? Both for purchase and purchase return, what is the posting in purchase account? What is the posting of purchase account? Purchase to Amrit. So in purchase account to Amrit, what is the amount? 10,000. No other transaction. So balance carried down 10,000. Balance brought down 10,000. Got it, not got it. This 10,000 is there in purchase account. At the end of the year, where will it go to? It will go to trading account. Yes or no? If I prepare a trading account here, two purchases will come how much? 10,000. Yes or no? Anna, what is the real purchase? 9,500. Remaining 500 is returned where? In the purchase return account. So this entry, if I post in purchase return account, what is the posting? Amrit to purchase return. In purchase return, by Amrit. I'll discuss about posting in depth in the next class. Now ledger teach panna. But since you are coming from 11th and 12th background, I believe you know the ledger. So with that confidence, I'm teaching you this concept. Got it, not got it. Otherwise, in the next class, I'll discuss ledger in depth. So by Amrit. How much? 500. Carried down 500. Brought down 500. So purchase return, what do we do in the trading account? Minus purchase return 500. Net is how much? 9,500. If you want this kind of presentation, if you want on the trading account purchases and purchase return to be shown separately, apana purchases on the purchase account record pannom, return on the return account record. If you want the purchases account and purchases return account to be visible separately on the face of trading account, then purchase will go to purchase account, return will go to return account. Got it, not got it? Okay. The question here is, why do we want to see purchase and purchase return separately? Yedhukku separate aveno? Nee net pani 9,500 kamcha, is a problem. That I'm going to answer. Listen to me very carefully. So if I don't reverse in purchase return account, if I reverse in purchase account itself, how does the ledger looks like? So what is the purchase entry? Purchase to Amrit. 10,000. And by Amrit, return 500. So what is the carry down balance? 9,500. So if I go with the return in the purchase account, how does my trading account looks like? In the same trading account, two purchases. Now how much will come? 9,500. Out of these two, which you as a banker, you as an investor, you as a user of financial statement, உனக்கு எந்த presentation கொடுத்தா உனக்கு informative-ஆ இருக்கும்? Think about it. Who are you? Users of financial statement. Who are the users? Owner, employee, government, banker, creditor, prospective investor, that is public, customer, 7 people. You as 7 users, out of these two presentation, which presentation for you is more important, useful for decision making? First one, because first one is giving information. Oh, this gentleman has purchased 10,000 worth of goods. In that, 500 worth of goods is returned. Like that, I'm getting a clear-cut picture from this first presentation. In second presentation, do you understand how much worth of goods is returned? Do you understand how much worth of goods is returned? Not possible. So here, information is better. Here, information is very suppressed. Hence, we follow this method everywhere. Got it, not got it? Got it, not got it? Who will follow this method is basically, in my business, my purchase return transactions are very, very limited. Out of 1 lakh items I purchase, in that only 1 or 2 items I return. Rest all I don't return. So the amount of purchases that I return is very immaterial. Immaterial means what? Insignificant. இப்போ நீங்க Flipkartல நிறைய vendors இருப்பாங்க. They will buy, sell so many times during the period. So for example, yesterday I purchased one product. Today I returned it. Like that, how many customers will purchase and how much will return? So any shopkeeper who's listed on Flipkart, Amazon, on those platforms, they will have multiple purchase return, multiple sale return. So they want to keep a track of that separately. So they will record everything in purchase return and sale return account. Got it, not got it? So any business which has got numerous purchase return transaction, numerous sale return transaction, they will record it in a separate ledger called as purchase return and sales return. Got it, not got it? But any business which has got negligible, very limited purchase return and sale return, they will do the reversal in the purchase account and sale account itself. Got it, not got it? Got it, not got it? Imagine this scenario. In the trading account, sale is 10 lakh minus sale return 6 lakhs. So what is my net sales? 4 lakh. This kind of presentation will come in the trading account when when the sale is recorded in the sale account, and return is recorded in the sale return account. Imagine I don't follow sale return. I pass the sale return entry in the sale account itself. In that case, what is my net sales? Sale will be 4 lakh. Now, who am I? Investor. In the business, na panam kuduthirken. I will prefer this model. Yen theriyuma? Looking at this, I'm getting some information. I'm asking him, donkey fellow, during the entire year, you sold 10 lakh worth of product. In that 6 lakh came back return. Why? I'll question. That questioning ability came from where? From this presentation. As a business, had you given me this presentation, sale is 4 lakh, then as an investor, I would have said, oh, 4 lakh only sale happened. Parvala. But when you gave me this presentation, I was shocked. You sold product worth 10 lakh. In that 6 lakh worth product is returned. Why did customer return the product? Upon product quality liya. It had defects in it. Why did customer return? I'll ask him question. I as investor will ask question to the owner. Hence, the financial statement is prepared for the user. So present such information in the financial statement which will enable the user to take decision. Will you invest in such a company where 60% of the product is refunded? Tell me. 10 லட்சம் வித்திருக்கீங்க 6 லட்சம் refund வந்திருக்கு. Will you ever try to invest in such a company? No. So that's why presentation matters. So if you want this kind of presentation, the sale will be recorded in the sale account and return will go to sale return account. Purchases in purchase account, purchase return in purchase return account. Got it, not got it. So one, if I want more information about purchase return, sale return, I'll prefer return account separately. Second, in my business, if I have numerous purchase return, sale return, I'll go with return account separately. So if both the conditions need to be taken care of, you need return account separately. But in my business, purchases return, sale return are very negligible. Out of 1 lakh transaction, 2, 5, 10 transactions only are there. But do I need to show separately? Not required. Then the reversal can happen in the purchase account and sale account itself. Got it, not got it. Got it, not got it. Okay. You will not believe. This question generally asked to people who come to CA intermediate. How? After qualifying foundation. This question sometimes asked to intermediate people who qualified inter and came to final. In which scenario we have purchase return, sale return account, and in which scenario no purchase return, no sale return account. You will not believe, till date, nobody gave me the answer. In the question exam, this question, why purchase return? Why not purchase return? The question will not come in the exam. Without this also, you can pass the exam. But are we studying? Are we studying only with intention to clear the exam? Are we doing only exam-oriented preparation? Passing examination is sufficient. Or in future, tomorrow, when you go for articleship, if somebody asks questions, you should be able to exhibit your knowledge. Is that not important? That is also equally important. Today, you may not feel that much pressure. Sir, if somebody asks question, I'll manage that day, you'll tell. Because today you're focused only on exam. You're focused on current problem. But tomorrow when people ask question, you'll not be able to answer no. That time it will prick your heart very badly. Oh shit. Like that I can ask you n number of questions for which you will not have answers. So always remember, as long as you're in 11th, 12th and foundation, not knowing a conceptual idea not knowing things conceptually or ideology behind the transaction is okay because you're not an expert. For 11th grader, 12th grader, college apnina, you are not an expert. But the moment you come to the professional course, you are considered to be the number one in the entire country. You are number one in accounts. Number one இருக்கிற நீ உனக்கு knowledge இல்லை அப்படின்னா எவனுக்கு இருக்கும்? அப்போ isn't it important to have equal amount of knowledge in this profession or not? Tell me people. Knowledge is important or not? Very, very important. Clear or not clear? This is clear. Okay. Chalo, let's go to next part. Come back. Have you all written the transactions? What is the entry? Amrit account debit to purchase return. Amrit to purchase return. Yes, boss. Now the question she is asking is, if the same question is coming in exam, should we write to purchase or purchase return? Am I right? I'm coming. If the same question comes in exam, should I write purchase or purchase return? If nothing is said in the question apnina, always you'll open return account. Yeah, apnina, we believe that we want to give information to the users of financial statement. And we believe that in this particular business, there are numerous purchase return transaction and sale return transaction. Therefore, whenever the question is silent about the return, we'll always root the return in the purchase return and sale return account. Okay, not okay? Okay. Second is, what is the classification of purchase return? You will write nominal only come. If the same ditto question comes in exam, you will classify purchase return as nominal income. Got it, not got it? We cannot go and fight with them that why did you do nominal account? Because there is no choice, boss. That's why even ICI introduced a new concept called as modern rule. Because they also know that it is not justified. But in exam, I've tried something in come, no? So what ICI says, we'll follow. So ICI says purchase return is nominal means nominal. In some textbook of 11th standard, if you see, they've written this as real account. Have you come across this somewhere? Any of your textbooks where they say purchase return is real account? Have you come across anywhere? No. But in some textbooks, in 11th and 12th, people have come and showed me, say in our book it is mentioned as real account. This is wrong. Why they said real account is because people could not justify purchase return using nominal account. Oh, nominal account not possible, no. We'll put purchase return as real account. Debit what comes in, credit what goes out. Credit what goes out. 500 worth of goods is going out. So credit what goes out. They're trying to justify. Purchase, you'll put nominal and return you'll put in the real account. How is it possible? What is nominal account? All the account which is coming in trading and P&L account is nominal account. Purchase return also is going to your trading and P&L account. How can you put this as real account? So not possible. People put real account in some textbook because they wanted to justify the applicability of golden rule. Don't try to justify what is not applicable. Got it, not got it? So in exam, if they ask you what is the classification of purchase return, don't write real account income. It is nominal account. Got it, not got it? Okay. Next. December 16, he received from Arvind 2,300 in full settlement. May I know who's Arvind? Arvind is our customer to whom we have sold the goods on credit. Please tell me, in which transaction have we sold goods to Arvind? In the 6th number transaction, on December 12, we have sold goods to Arvind for 2,400. How much money should I receive? 2,400. But the question says that we received from Arvind 2,300 in full settlement. What is the meaning of full settlement? Full settlement means, or final settlement means, in the amount, how much are you supposed to receive? 2,400. How much are you receiving? 2,300. Are you receiving more or less? How much less? 100 less. This money, what you're receiving less, is gain for you or loss for you? Loss for me. So debit all expense and losses. Got it, not got it? Okay. My question to all of you, in this transaction, how many accounts are affected? Think and respond. How many accounts are affected? So 3 accounts are affected. First is Arvind account. First is Arvind account. Second is from Arvind, I'm supposed to receive 2,400, but I'm collecting only 2,300. 100 what I'm not collecting, that is called as discount. That is called as discount. Next is money is received, cash or bank. Nothing mentioned means bank. Any problem? Okay. Listen to very carefully. In the earlier transaction, you have debited Arvind. Debiting Arvind means what? Increase in asset. You're remembering that you have to collect money from Arvind 2,400. But how much did he pay? Only 2,300. When we record asset, when we want to receive the money அப்படினா debit. The moment we receive the money, we will credit it. For example, let's say Prasad, while going home from that petty shopkeeper, he is purchasing one chocolate for 10 rupees on credit. So in the book, what will he write? Prasad 10 rupees. Means what? We need to remember to collect this 10 rupees from Prasad. Yes or no? Tomorrow, while going back on the way, he paid 10 rupees. He gave 10 rupees. Apana, to make the zero, what will I do? Minus 10. Vaangra varikkum plus 10. Paisa vaangnadukapra minus 10. So what is balance of Prasad account now? 0. Now, similarly, imagine this is not Prasad, this is Arvind. From Arvind, how much money should I collect? 2,400. How much are you collecting? 2,300. If I put minus 2,300, balance will be as if I have to collect from him. 100 ரூபா வாங்குற மாதிரி கணக்கு வந்துரும். But are we going to receive any money from Prasad? Sorry, Arvind? Sorry. Are we going to receive this money from Arvind in future? No. Appo, should I minus 2,300 or should I minus 2,400 fully? Full 2,400 I should minus. Apana, here it should be minus 2,400. When you recorded Prasad in my books, you added 2,400. Add in accounts means debit. If debit is plus apnina, minus will be what? Opposite. It will be credit. So Arvind, should I debit or credit now? I should credit. Okay, not okay. Arvind is what classification? Arvind is debtor. Debtor is asset. Debtor is asset. What asset? Artificial personal account? Natural personal account. Natural personal account. From his point of view, receiver or giver? His point of view. Avan receive pandrana, give pandrana. He is giver. Giver of what? Money. Credit the giver. Credit the giver. Any problem? No problem. I also said here 2,400 I should give a credit. Credit the giver. Okay, not okay. Debit here plus. Credit means minus. Got it, not got it. How much amount? 2,400. Don't put 2,300. You put 2,300 apnina, balance 100 rupees will come in his account. As if we have to receive. Are we going to receive from him? No. Got it, not got it. Okay. Discount another loss. I'm supposed to get 2,400, but I'm only getting 2,300. 100 I'm not getting. I had expectation I should get, but I'm not getting that money. My expectation is gone. Upon that is my loss. Loss is going to which account? Nominal account. Loss is nominal account. What is the rule? Debit all expense and losses. Debit all expense and losses. So discount will be debited. Bank is artificial personal account. In bank, money is coming. On your behalf, banker is receiving money. So debit the receiver. Debit the receiver. What is the entry? Very good. Bank account debit. How much money came to your bank account? 2,300. What is your loss? Discount account debit. How much? 100. 2 Arvind. How much? 2,400. Got it, not got it. Now we can do it. So here, if you write discount allowed, nothing wrong. Discount allowed means we allowed discount. We gave discount. For example, if you go to lifestyle and buy product, if he is giving discount, loss for him. So I want to get discount allowed. For you, it is discount received. Got it, not got it. So we are now accounting from point of view of business lifestyle. So for him, discount allowed. Discount allowed is always a loss. Any difficulty? Yes, boss. Whenever in CA Foundation, when they say money is received, cash or bank, if they don't specify aptina, will always assume bank here. In state board, you assume cash. But in foundation, always you'll assume bank. Got it, not got it. Okay, not okay. Okay. Can I ask you, what is the balance in Arvind account? 0. Very good. Arvind account, you added earlier, debited earlier 2,400. Now you subtracted, means credited 2,400. So balance in his account is 0, which means what? We don't have to receive any money from Arvind in future. Bank, personal, discount, nominal, Arvind, personal. Okay, not okay. This type of journal entry is called as what? This type of journal entry is called as compound journal entry. Super. December 18, he withdrew goods for personal use. Withdrew goods for personal use. Anything which I withdraw for personal use is drawings. Drawings always is debited to capital account. So capital account debit. Capital is what classification? As per golden rule. It's an account. It's an account that belongs to owner. Owner is rent account. One is capital account and drawings account. Capital is credit balance abdina. Drawings is always debit balance. You'll understand this eventually. Capital account and drawings account both belong to owner. Owner ku kudukku vendi amount is liability or not? Yes. What type of liability? Internal liability. So drawings will belong to capital account. Any problem? Drawings will belong to capital account. Capital is internal liability. So all the liabilities go where? To the personal account. Natural or artificial? Here the owner is natural person. So this is your natural personal account. Got it, not got it. So from his point of view, owner's point of view, is he the receiver or giver? He is a receiver of goods. He is a receiver of goods. Debit the receiver. Debit the receiver. Got it, not got it. Any problem? No. Next is what? What is next? What is he withdrawing? Not cash. He's withdrawing goods. Listen to me very carefully. He is withdrawing goods. Goods means what? That which you purchased in the business with the intention to sell. In business, what does goods means? That is something which I purchased in the business where my intention was to sell. Listen to very carefully. In the goods வாங்கும்போது, what entry did you pass? Purchase account debit to cash, bank, creditor, என்ன வேணா இருக்கலாம். நீ cash கொடுத்து வாங்கினீங்கன்னா to cash, check கொடுத்து வாங்கினீங்கன்னா to bank. If you've got on credit அப்படின்னா to creditor. Anything can come. That's not the point. How much is the amount? 1,000 rupees. 1,000 rupees, 1,000 rupees. What transaction this is? Purchase transaction. What transaction this is? Purchase transaction. This 1,000 rupees account, we means accounts ka rules allowed you to record in the debit of the purchase account as expenditure because you promised to sell. இந்த 1,000 rupees வந்து உனக்கு செலவா அக்கவுண்ட் பண்றதுக்கு அலோவ் பண்ணியிருக்கோம். நாங்க அக்கவுண்ட்ஸ் உன்னை அலோவ் பண்ணியிருக்கோம். எதுக்கு? பிகாஸ் யூ ப்ராமிஸ் தட் யூ வில் செல் இட். அப்ப நீ பொருள் வித்திருக்கணும்ல. How will you fulfill the promise? By selling it. Did you sell it? No. What did you do? You gave to the owner for personal use. அப்ப நான் ப்ராமிஸ் நீ வந்து என்ன பண்ண? பிரேக் பண்ணிருக்க. So, can I allow this 1,000 rupees to be claimed as expense of the business? உன் வீட்ல யூஸ் பண்ற பொருளுக்கு எல்லாமே பிசினஸ் செலவா காமிப்பியா? All the product that you will use in your home for personal purpose, will you show that as business expenditure? No. So now the expense is what you have shown. To cancel it, to reverse it, I have to give a credit. To record expense, you gave a debit. To reverse expense, credit. So now this purchases of 1,000 rupees is not eligible to be in the purchase account. Hence, I have to reverse it by giving a credit. Hence, purchase has to be credited. So what is the journal entry? Drawings account debit to purchases. But I have a question. To all those people who followed nominal accounts in 11th and never asked question to your teacher, I have a question to you. Purchase நீ credit பண்ணல. What is purchase ka classification? Nominal. In nominal account, when do you credit? When is income and gain? In which angle this is income and gain for the business? You tell me. Owner took the product and went. He gave the money. Same money. 1,000 rupees இந்த பொருள் வாங்கியிருக்க அப்படின்னா owner gave full 1,000 rupees. He didn't give it the selling price. He gave it at the cost price. I'm owner. I'm into business of buying and selling mobile phone. This mobile phone for 1,000 rupees I purchased. Did I give this phone for 1,500 rupees to owner? No. Owner took at the same cost. Business என்ன cost வந்துச்சோ அதே cost owner has taken this product. 1,000 rupees same I'm receiving from the owner. Is it gain for me? Is it income for me? How can I apply the nominal rule here? Nominal account says what? Debit all expense and losses, credit all income and gain. Credit all income and gain. You're crediting, boss. Look at the entry. 2 purchases, nominal account, you're crediting 1,000. What is the rule here? Income gain nala credit பண்ணோம். In which angle this 1,000 rupees is income and gain for you? நீ 1,000 பொருள் வாங்கியிருக்க, 1,000 கொடுத்துட்ட. இதுல உனக்கு என்ன லாபம்? You got for 1,000 rupees from market. You gave to the owner for 1,000 rupees. What is your advantage, boss? What is your income? What is the gain? Nothing. How the hell nominal rule is applied here? Hence, in this case also, we can't apply golden rule. Hence, we are applying what? Modern rule. Modern rule says what? Expenses, debit balance. To increase expense, debit. To decrease expense, credit. But same question if comes in exam, you have no choice but to write nominal account income. In case if the same question comes in exam, you have no choices. You write purchase as nominal only income. But I'm putting a concept in your head that this golden rule is not applied here. Okay, not okay. 100%. She's asking, will owner always withdraw goods at the cost price? You tell me, my dear. You have a chocolate shop. You like Ferrero Rocher chocolate like me. Ferrero Rocher chocolate ka original selling price, MRP is 500 rupees. Purchase price is 300. நீ 500 ரூபாய் கொடுத்து பிசினஸ் இருந்து வாங்குவியா? If you say take higher selling price, profit is getting booked. No, how the expense is getting reduced? நீ வந்து 500 ரூபாய்க்கு எடுத்திருக்க அப்பனா 200 ப்ராஃபிட் வந்துச்சா so which means 200 ka profit you're increasing think and answer no one second I'll just tell you this is business and owner technically are same but from accounting viewpoint both are separate tell me which owner will take 300 worth of goods at 500 because if 300 worth of product if he's taking at 500 now there's a profit of 200 in business if I show 200 profit I have to pay tax on that அப்ப நான் என்னோட பிசினஸ்ல நான் ஒரு பொருள் 300 ரூபாய்க்கு வாங்கி எனக்கே நான் 500 ரூபாய்க்கு வித்திருக்கேன் 200 profit I'm giving to business and paying tax to government ultimately this profit comes to whom me only tax will go to government think about it aram se since she has asked a very beautiful question I want to answer what is the selling price 500 to whom have I sold my own self நான் எனக்கே வித்திருக்கேன் what is my cost price 300 what is the profit 200 this 200 profit is going to whom me only so this 500 rupees I'm paying to my own self 200 is my profit so if I want to do business I will not sell it to third party I will do business to my own self I learn profit அது profit இந்த 500 ரூபாய் காசு நீயே உன் பிசினஸ் நீ தான் கொடுத்திருக்க எல்லாம் உன் பிசினஸ் நீ தான் பண்ணிருக்க அப்ப ஏதாவது சம்பாதிக்கல okay right forget nothing we want forget it but 200 ka profit that you've booked to income tax department you have to give tax no is it of any benefit to you if I take the goods from business at the selling price as a owner if I take the goods at the selling price am I benefiting here no who's benefiting here only income tax department is benefiting imagine the tax rate is 10% 20 ரூபாய் வந்து யாருக்கு போகுது கவர்மெண்ட்டுக்கு போகுது to pay 20 rupees to government as income tax ஏதாவது லாஜிக் இருக்கா அதுக்கு பேசாம 300 ரூபாய் பொருள் நீ 300 ரூபாய் எடுத்துக்கோவேன் no profit no loss because my own product I'm taking enjoying so why will I show it at selling price got it not got it so there is no logic to buy the product from my own business my own self and register a profit so nobody will do this because in this entire process we are not getting benefited who's getting benefited income tax department is getting benefited so who will do this nonsense nobody will do it if you're selling at loss அப்படினா நீ 300 ரூபாய் பொருள் வாங்கி எவ்வளவு வித்திருக்கீங்க 280 IS auditor will spare you. Why did you sell at 280? I'll ask. Answer. நீங்க வந்து எல்லா ஓனர் நான் வந்து கிளைண்ட் எப்படி 280 நீ பொருள் எடுத்தேன்னு சொல்லி அப்பனா நீ வேணும்னு என்ன பண்ணிருக்க உன் பிசினஸ் லாஸ் காமிக்கணும்னு சொல்லி வந்து போட்டிருக்க tomorrow you'll get notice from income tax department 300 worth of product you sold to yourself for 280 அப்பனா you're showing a loss of 20 rupees in the business in the loss is called as cooked up loss income tax department cooked up na nee vende venute loss create pannirke so this loss will get triggered and tomorrow you'll get notice from income tax department sorry you're telling something amma you have purchased for see if you're selling this product of 300 at 280 to third party for that there's a bill it's a genuine transaction it's a pure loss genuine loss allowed but what did you do here 300 ka product you're selling to your own self for 280 rupees and booking a loss of 20 rupees is that allowed not allowed 100% that's what I'm no she's asking one scenario I'm answering for that obviously that loss in accounts will reduce from capital but forget that point of view capital getting affected is not a point here the point is will income tax department agree you're booking a loss of 20 rupees boss so your tax is going in negative which will get adjusted with the future profits. Losses can be adjusted with future profits. So, our tax effect out. You will understand all this in income tax next year. So, it is not allowed. Since she is asking, we are going out of the way. So much depth is not required. We'll go to inter and discuss all these extra things. Come back to the basics. Now, December 20, he withdrew cash from business for personal use. This is favorite question of the 11 people. 100 times you have done this in 11th standard. Money withdrawn for personal purpose. What is entry? Drawings to cash. Drawings to cash. Drawings to cash. December 24, paid telephone charges. Telephone charges my business expenditure. Telephone charges business expenditure. Debit all expense and losses. Debit all expense and losses. Nominal account. And money is going out. Money is going out. Nothing mentioned. What is it mentioned? Paid mentioned. Whether cash or check not mentioned. So always we'll assume bank. So bank paid. To bank, artificial personal account, 110 rupees. Any problem? December 26. Amount paid to Amrit in full settlement 9450. Now, who is Amrit? Who is Amrit? Amrit is our creditor. Now, from Amrit, what transaction we have recorded? Sir, Amrit we initially credited. Amrit initially credited 10,000 rupees. Then we debited Amrit 500. Yes or no? Amrit credited 10,000. Credit here means plus. For liability holders, always it is credit balance. Credit balance means plus balance. Amrit here debited. Debited means minus. Tell me how much money I'm supposed to pay actually to Amrit. It's positive balance 9,500. Credit means credit balance. Means I have to pay 9,500 to Amrit. I have to pay 9,500 to Amrit. But how much am I paying him? 9,450. How much less? 50 rupees less in full settlement. So now, minus, should I do 9,450 or 9,500 in Amrit account? If I do 9,450 debit here, Abdina, balance 50,000, I have to still pay him. Abdin varum. Am I going to pay him? No. So full 9,500 ka account has to be closed. So minus 9,500. Got it? Not got it? So Amrit account will be debited. Amrit account debit 9,500. Any problem? I'll do it on the whiteboard. Amrit account debit 9,500. Okay. How much are you paying? 9,450. From where? Cash or bank? Bank. Bank is artificial personal account. He's paying the money on behalf of you. Debit the receiver, credit the giver. Credit the giver, credit the giver. Banker is giver on behalf of you. To bank. How much money is going out actually? 9,450. 9,450. How much money are not paying? How much money you're not paying? 50 you're not paying. That money which you're not paying, it's a gain for you. It's a gain for you. Gain is nominal account. Debit all expenses and losses, credit all income and gain. So that is called as to discount received 50 rupees. Got it, not got it. This kind of journal entry is called as compound journal entry. Now, always check whether double entry system is being taken care or not. How will you check? The total of the debit should be equal to total of credit. 9,500 is equal to 9,500. If both column has got same total, Abdina, you have followed double entry system of accounting. You have followed double entry system of accounting. Got it, not got it? No energy. My simple question to all of you. This discount is what discount? Is it cash discount, trade discount or rebate? Others? Where did I discuss the concept of cash discount, trade discount and rebate? 11th. Yes or no? In foundation, will we have time to discuss all of them in depth? I can give a revision, but can I go in depth? Not possible. In 11th, I had 1 year to take the entire syllabus. Aram se I took in depth, nariya points, nariya sums we worked out to give that hold. But now in 6 months, you have to complete 11th portion, 12th portion, plus depth of these portions, plus foundation ka new portions. Can I go in such a slow pace for all the classes? Not possible. Somewhere the pace has to be increased. So what are you supposed to do? Before I complete foundation topic, corresponding topic in the 11th and 12th you have to complete. Only then, when I take the same part in the foundation, you'll be able to get a proper flow. Got it, not got it? So what is the meaning of trade discount? So trade discount is a discount offered by the seller for bulk purchase and bulk sale. Trade discount is never recorded anywhere in the books of accounts. It is presented only on the invoice. Very good. I can only do a revision here. In-depth discussion of this has already happened in 11th standard. I can do a revision. I can touch all the points very fastly, but can I make them sit and understand in the class? I can do it, but there's no time. If all of you say that, sir, next Jan 2028 will write exams, sir. I have luxury time. In depth, I'll go. But we are writing in Jan 27. So can we travel so fast? We have to travel, no choice. So what is trade discount? Trade discount is a discount. Bulk discount. Trade discount is a discount given by the shopkeeper for the bulk purchase or bulk sale. Trade discount, you never open any ledger. Trade discount is never recorded in the books of accounts. You might get a question, true and false question. Trade discounts are debited in the trading and profit and loss account. True or false? False. Trade discount are never opened in the books of accounts. It only comes as information in your Invoice. Got it, not got it. Okay. What is cash discount? Cash discount is a discount offered by the seller for immediate payment, early payment, and prompt payment. Immediate payment என்ன? இன்னைக்கே நான் வாங்குறேன் goods. இன்னைக்கே immediate pay பண்ண அப்படின்னா immediate payment. Early payment means what? Before the due date. Prompt payment means what? On the due date. Got it, not got it. So cash discount is a discount given by the seller to the customer for immediate payment, early payment, and prompt payment. Okay, wow. For cash discount, do we open account? Yes. So this is cash discount. So why did we give this discount? So that we get the money on time, or we pay the money on time. In the discount நம்ம வாங்கியிருக்கோம். யார் கொடுத்திருக்கான்? Amrit is given this discount. Why? He knows that if he doesn't give the discount, we will not pay him on time. So therefore he said, no, I'll give discount, you pay money today itself. He gave the discount that way. So discount received and discount allowed is nothing but cash discount received and cash discount allowed. Got it, not got it? Okay. What is rebate? What is rebate? When a discount is given by the seller, rebate also is discount given by seller, but for a reason other than trade discount reason and cash discount reason. நீ trade discount என்ன reason கொடுத்தியோ, cash discount என்ன reason கொடுத்தியோ, அந்த reason தவிர்த்து வேற என்ன reason வேணா இருக்கட்டும், அதுக்காக நீ discount கொடுத்த அப்படின்னா that is called as rebate. What could be the reason? So goods were defective, sir. Goods were not as per specification, sir. Goods came late to me, sir. Because of that, we had to give a discount. So that kind of discount is called as rebate. Rebate allowed means loss. Rebate received means gain. This point was discussed in 2 classes in 11th standard. I took 2 classes in 11th to discuss this concept of trade discount, cash discount, and rebate. இது மொத்தமாவே நான் 5 நிமிஷத்துல முடிச்சிட்டேங்க. Yes or no? No choice. Anyways, coming back. This point in most of the places they will not even touch only. They will not even discuss this point. At least I'm revising. In so many places they will not even touch these kind of points. Anyways, coming back. Last transaction. Have you written this transaction? If you're not written, write it down. Amrit, 2 bank, 2 discount. Sir, in your journal entry, you wrote 2 discount first, 2 bank later. Array donkey fellow. In the credit part, anything you can write first and second. There's no problem in it. Anything can be first, anything can be second. Next, sir. December 31, paid for stationery 200, paid rent 5,000, paid salaries 2,000. You can record all the 3 transactions separately also. If I record separately, what happens is waste of time. So accounts gives us an option to pass a combined entry called as compound journal entry. Got it, not got it? Okay. Stationery expenditure, rent expenditure, salary expenditure. All the 3 are expenditure. Debit all expense and losses. So all the 3 I will debit. All the 3 I will debit. And question says it is paid. Paid in cash or bank, not mentioned. So what will you assume in foundation? Bank. To bank. Given where it is mentioned. Oh my God, cheater fellow. He gave here. No assumption. He said bank here. So to bank. Any problem? Any problem? Online people. Any problem? Gokul video. Harini, Saranya ma'am. Runetra. Anushruti. All of you, please keep your video switched on. Okay. Super. Next question, sir. Question number 6. Before that, can I do one thing? Can I now teach you modern rule also? Not a big deal. We can finish it off. One more entry, sir. Oh my God. Which one? I'm so sorry. Oh my God. After 14 transaction, there's one more transaction. 15 transaction. Okay. This is also a question coming from 11th standard. Was this completed in the recording, Kana? Science student? This free sample 1 is completed in the recording? Very good. Okay. Now, on December 31, goods distributed by way of free sample. Goods distributed by way of free sample. What is meant by goods? Goods is purchased in the business with intention to sell. Goods are purchased in the business with intention to sell. When you purchased, what entry did you pass? When you purchased, you pass the entry purchase account debit to cash bank credit, whatever it is, 2,000. Tell me people, we allowed you to record this 2,000 in the purchase account as expenditure because you promised to sell. Income tax department said that we will allow you this as expenditure because you're going to sell in future. When you record income, to reduce your income, I have to record expenses. Income tax department allowed. So what did you do? Instead of selling this 2,000 worth of product, you gave this as a free sample. So income tax department says, I will not accept it. Income tax department says, I will not accept it. I will not allow as expenditure. Is it right or wrong? Income tax department here is wrong. Why? Because though I'm giving as a free sample, why am I giving as a free sample? Imagine I've started a chocolate business. My chocolate is a brand new chocolate. Nobody is aware of it. Will you come and buy? Will anybody come and buy? No. I have to give them for tasting purpose. I have to give them for tasting purpose. So I'm giving this for tasting purpose. No, sir. So still I'm using this for business. No, sir. So why is income tax department saying no? So when we made this argument, department said, okay, we'll give it. You claim expenditure, you give it. He gave it. But accounting expert said no. You claim expense, but don't claim under purchase head. You claim under some other head. நீ எக்ஸ்பென்ஸா கிளைம் பண்ணு, தப்பு இல்ல. ஆனா நீ எக்ஸ்பென்ஸ் கிளைம் பண்ற அக்கவுண்ட் இருக்கு இல்லையா, அது தப்பாயிடும். So you have to remove the expenditure from purchase account and take it to the advertisement account. Got it, not got it. Okay, not okay. So this 2,000 is recorded in the purchase account. To record expense, you gave a debit. To remove expense, credit. So two purchases will come, 2,000. Appo what should I record in debit? Since this product was used in the business for the business benefit, it is expenditure only. What is the best heading? Sale promotion expenses, advertisement expenses. Why did you give us a free sample? For development of the business. Today you give us free sample. Tomorrow same person will give the order. So business ka dhaan ni panna. So this should be taken to the advertisement account or sample account. Whatever name you say, anything is allowed. So what did ICA take? Advertisement expense account or sample distribution expense account. Anything is allowed. Anything is allowed. So advertisement expenditure or sample distribution expense account debit 2,000. Two purchases 2,000. Got it, not got it. So we are removing expense from one account to another account. We're shifting the expenses from one account to another account. Got it, not got it. Clear or not clear? Energy, why so down? Tired? Idike tired every day. Pogo facilitate 4 hours class continuous depend. Continuous 4 hours I'll take 10 to 2. What will you do? Faint and fall, huh? That time also I will not leave. தண்ணி அப்படி தொலைச்சு விட்டு ஏன்சி உட்காருமா படிக்கணும்னு சொல்லி உட்கார வச்சிருக்கேன். நான் வீட்டுக்குள்ள அனுப்ப மாட்டேன். Now, can we go to the next rule? The next rule is called as modern rule, which is a extension giving a new perspective about the rules of debit and credit. This modern rule is derived from golden rule. Modern rule, it does not come from some new universe. It is a creation out of golden rule. We have extracted this from the golden rule. The base of modern rule is golden rule. Golden rule is also called as American approach, not Indian approach. What is it? American approach, also called as accounting equation approach. This rule says that I don't want personal account. I don't want real account. I don't want nominal account. You take any transaction. All the transaction will have 5 flavor into it. How many flavor? 5 flavor. Which flavor will be there? Either asset or liability or capital or income or loss. That is expenses. We did entire journal entry in golden rule now. Can I see all the transaction either had asset account into it or liability or capital or income or expense? This is where the account irundha. Income includes gain, expense include loss. In the 5 classification tavathu, was there any other classification? You tell me. You take any account that we did. Everything was either income, expense, capital, asset, liability. Idudha. So now modern rule is asking, when all the accounts can be classified in this name, why personal, why real, and why nominal? Don't put extra information and confuse people. We'll keep it very simple. Let's not complicate. So now onwards, no more personal account classification, no more real, no more nominal. You classify all the accounts as either asset, liability, capital, income, and expenses. Okay, not okay. Okay, not okay. Okay. So in the modern rule, the classification is no longer personal, real, nominal. It is asset or liability, capital or revenue or expenses. Income is replaced by the word revenue. Income ke badal it is now revenue. Revenue includes gain. Expenses includes losses. Got it? Not got it? Got it? Not got it? Asset will always have debit balance. Asset will have always debit balance. This is coming from where? Golden rule. Take example. Furniture. If I'm buying furniture, furniture is going to come in. Furniture is what classification? As per golden rule. Real account. What is the rule of real account? Debit what comes in. Debit what comes in. Yes or no? Now imagine the furniture is coming inside Aptina. In the furniture account, what is the posting? Imagine the furniture is purchased for cash. What is the journal entry? Furniture to cash. In furniture account, to cash. To cash will come, let's suppose 10,000. Imagine no other transaction. If I balance this ledger, carried on will become 10,000. Brought down will become 10,000. The brought down balance comes on debit side. What balance it is? Debit balance. So if asset is having what balance? Debit balance. Okay, not okay. Sure? Okay. I'm a very dangerous fellow. I can walk out anytime. You can ask my past students. I want proper answer. I'm telling asset is debit balance. I've proved why asset is debit balance here. Any problem? So whenever any asset is coming into picture Apdina, it'll always have debit balance. Now, again I'm buying furniture for 20,000 rupees. Again I'm buying furniture for 20,000 rupees. Will I record on debit side or credit side? திருப்பி 20,000 ரூபாய்க்கு நான் ஃபர்னிச்சர் வாங்கியிருக்கேன். நீ ஃபர்னிச்சர் அக்கவுண்ட் ஃபர்னிச்சர் லெஜரோட டெபிட்ல போடுவியா இல்ல கிரெடிட்ல போடுவியா? டெபிட். To cash 20,000. Now what is my carried on balance? 30,000. What is brought down balance? 30,000. To increase furniture, what did you do? Debit. So for a debit balance item, to increase it, 10 plus 20, to add 30, you have to give a debit. Got it, not got it? Got it, not got it? Okay. Imagine 5,000 worth of furniture sold. 5,000 worth of furniture sold for cash. What is the furniture sale entry? Furniture goes out. Credit what goes out? To furniture. What is coming in? Cash is coming in. Debit what comes in? Cash to furniture. In furniture account, buy cash. Buy cash 5,000. Now what is the balance in furniture account? இப்போ என்கிட்ட எவ்வளவு worth of furniture இருக்கு? Sir, 30 இருந்தது. In that 5,000 gone. How much am I left with? 25,000 worth of furniture. 25,000 worth of furniture. Asset is what balance? Debit balance. To increase asset, debit. To decrease asset, credit. Oh. So here, credit means decrease in asset balance. Decrease in asset balance. Any big difficulty? So this modern rule is derived out of golden rule. What concept you know? No, that concept is rephrased in a better language. So now we are going to do all the journalizing based on this. In the entire foundation, whatever chapter you're going to deal, in the entire CA intermediate, in the entire CA final, wherever journal ledger will come, we'll only discuss based on modern rule. I will never ever discuss from the point of view of golden rule. Got it, not got it? Then why did you teach golden rule, sir? Arey donkey fellow, this is there in your syllabus. If ICA is asking specific question based on golden rule, where will you go? Where will I go? So since it is there as a part of syllabus, I have to teach. Otherwise, I disowned golden rule long back. I disowned golden rule long back. But I'm teaching still because it's part of my syllabus. Come to inter. I will never utter a word about golden rule. I only talk about modern rule. We did 12th, no? How many times I've opened my mouth and talked about golden rule? You always use that modern rule, modern rule, modern rule. Got it, not got it? Clear or not clear? Okay. That is very difficult, but I can do one thing for you. Now, anybody in my class who feels very cold, next time come wearing sweater. Sir, summer if I wear sweater and go, people laugh at me. You carry sweater and come in your arms while coming outside. Inside you come and wear it. Okay, not okay. This will never go off. This AC people think that I put it for students. You guys are wrong. This AC is for me. I cannot take class without AC. In hot temperature, I'll become double hot. If I become double hot, you know what is going to happen. So it's very difficult to cool me down. This is required. If asset is debit balance abdina, liability is opposite to asset. Asset is opposite in there. Liability. Asset is opposite. Liability. Asset is opposite. Liability. If asset is debit balance, liability is to increase liability, credit. Who's the hero of liability? Credit balance. About to increase, credit. To decrease, debit. Apana, what is debit and credit? Nothing but plus and minus. Why are we not using plus and minus? Because debit will act as sometime as plus, add, and debit will act as sometime minus, less. Credit will act as sometime plus, and credit will act as sometime minus. So plus and minus becomes more complicated. To avoid that complication, they've wrapped up the plus and minus. Plus and minus, they've wrapped up with a wrapper name called as debit and credit. So debit and credit, with that apply rules, automatically the answer will come to you. You don't have to consciously decide what to add and what to minus. Got it? Not got it? Asset is what balance? Liability is what balance? Asset opposite. Liability opposite. Asset is what balance? Liability what balance? To increase liability, decrease liability, increase liability, decrease liability, increase asset, decrease asset. Super by hearting. Now, similarly, revenue opposite, expenses. Gain opposite, loss. Revenue, credit balance. Oh, sir. Debit all expense and losses. Credit all income and gain. Credit all income and gain. I told you modern rule is derived out of golden rule. So we cannot change the rule, boss. Golden rule says something else. Modern rule says something else, apdina, then there'll be a fight in accounting. So modern rule, when it was drafted, they kept golden rule as a base. They changed the language. They changed the way you think. They changed the way you present things. Rest, the soul is everything same only. So golden rule says what? Debit all expense and losses. Credit all income and gain. Same rule they have maintained. So credit balance item, for a credit balance item, to increase, I have to give a credit. To decrease, debit. For expenditure, to increase, debit. Decrease, credit. Revenue, what balance? Expense, what balance? Revenue, what balance? Expense, what balance? To increase expense, to decrease expense, to increase expense, to decrease expense, to increase income, to increase income, to increase income, to decrease income. By heart it? No problem. That's all modern rule. Over. Can we go to the next question? Super. Illustration 6. 3 donkey fellow left the meeting also. Who are they? I'll take the photo. Wait. Show the classification of the following accounts under traditional approach and accounting equation approach. Traditional approach means golden rule. Accounting equation approach means modern rule. Any problem? No problem. What are they asking people? What are they asking? Classification. What is the classification of golden rule? Personal, real, nominal. What is the classification of modern rule? Asset, liability, capital, expenses, losses, revenue, gain. Okay, not okay. Listen to me very carefully. Liability, capital, since both of them have the same rule, I combine them together. Ana, liability is different, capital is different. So there are how many elements of the financial statement? Elements, 5. What are the components of the financial statement? 2 components in there. Trading and profit and loss account and balance sheet. Those are called as components of financial statement. If I ask you what is the elements of financial statement? 5 elements. What is it? Asset, liability, capital, expense, income. This both question is there again in CA intermediate also. Got it? Not got it? So if I ask you how many components of financial statement, what will you say? As of now, from foundation point of view, it is 2. One is trading P&L account, second is balance sheet. How many elements of the financial statement? 5 elements. What are they? Asset, Liability, capital, income, that is revenue and expense. Asset is what balance? Debit balance. Liability, credit balance. Capital, credit balance. Expense, debit balance. Expense, debit balance. Debit all expense and losses. Expense, debit balance. Revenue, credit balance. Building as per golden rule, what classification? Building. As per golden rule, real account. As per modern rule, asset. Any problem? Real account, asset. 1 second. Purchases as per golden rule, nominal. Debit all expense and losses. And as per modern rule, expenses. Nominal, expenses. Sale as per golden rule. Sale is nominal. Modern rule, revenue. Nominal, revenue. Any problem? Bank fixed deposit means what? I have surplus money. I deposited that money in the bank. So whenever I want, in future, I can get it back. So anything that I get in future is asset. All the asset will go to real account except bank, debtor, bills receivable, prepaid expense, accrued income. A bank related, let it be savings bank account, let it be current account, let it be fixed deposit account. Everything is bank, no? So bank is excluded from real account. So where does it go to? Personal account. Which personal account? Artificial personal account. Not natural, madam. Artificial person. Got it? Not got it. Artificial personal account. Okay. Modern rule point of view. Asset. Because now potrika panam fixed deposit la. Whenever I want, I can take it back in future. Anything that I get in future is asset. Artificial personal account and asset. Any problem? Rent. How did you decide this is rent expenses? ரெண்ட்னு சொல்லியிருக்கான், அவன் பெய்டுன்னு சொல்ல ரிசீவ்டுன்னு சொல்ல. Yes, it's a thumb rule since 11th we are following. Whenever with regard to any item, any nominal account, they just mention rent, what you call salary or electricity or whatever, but they don't express whether this is expense or income. They don't express whether it is paid or received. We'll always assume it is expenditure, paid, got it, not got it, got it, not got it. So rent here is expenditure. Yes, let it be for anything, commission, anything, for any nominal accounts except purchase and sale. Because purchase and sale, with the name we know that purchase is expense, sale is income. This is where any other nominal accounts, the question is silent whether the nature of it is income or expenses. If it is silent, apna, always assume it is expenditure. Got it, not got it. As per golden rule, rent, nominal. Modern rule, expenditure. Nominal and expenditure. Rent outstanding. Rent outstanding. In foundation, so far I have not explained what is rent outstanding, but in 11th and 12th we have explained it. What is rent outstanding? Amount is due for payment but not paid. Due for payment another. Rent we pay for the premises that we are enjoying. Imagine this premises. This premises from March 1 to 31st March, I've enjoyed it. But in the agreement, we have agreed that I'll pay the rent every month, next month 5th. This is 1st March. This is 31st March. As per the rental agreement, it is agreed that March month ka rent I'll pay on April. April ka rent I'll pay on May. May ka rent I'll pay on June. Like that, I'm paying 5th of every month. 5th April. Now the question is, I'm making the payment here. When should I record expenses? Should I record the expense on 5 April or should I record the expense during this period? A little fast. You're telling that I should record expenses here. Why should we record expenses here? For that period. Can you a little bit more elaborate and say? Somebody said benefit word. Elaborate. Okay. Who's telling that statement to us? Very good. There's something called as matching concept. Have you come across this term called as matching concept? Matching concept. Where did you discuss? 11th, multiple times. 12th, multiple times. Not one or two times. Multiple times you discuss matching concept. Yes or no? Yes or no? Those who did 11th and 12th with me, tell, open your mouth and tell. What does matching concept says? Record expenses in that period, in which period we got the benefit. Record expenses in that period in which I got the benefit. Or record the expenses to the extent which is contributing to your income. Got it, not got it? Not got it. Got it? I'm not getting positivity. Simple question. Let's talk about Sangami Akka. Sangami is working for us from 1st March to 31st March. From Sangami, this academy has got benefit services from her. In which period? March period. March 1 to 31st March. Just because I'm making the payment to her on 5th of April, can I record the expenditure on 5th of April? No. If you record the expenditure on 5th of April, the benefit is coming here, expense is recorded in the next period, which will be violating the matching concept. Matching concept is there. Payment can never be the criteria to decide the expenses. In which year you got the benefit, in which month you got the benefit services, in the month of March. In that month itself, you have to record the expenses. Got it, not got it? So on 31st March, I have to record the salary entry and rent entry. So what is the entry going to be? Rent account debit or salary account debit. How much? 2,000. Did you pay it? Did you pay it? No. When will you pay? In future. Anything I pay in future is liability. So it will be 2 outstanding salary or outstanding rent. 2,000. Got it, not got it? This is expenditure. This is liability. Sir, on 5th of April, what entry will I record? Payment entry. What is a payment entry? Outstanding salary or rent account debit to cash or bank. Need liability. When you make the payment, liability goes away. To increase liability, credit. To decrease liability, debit. And from bank account, money goes out. Those who are still not getting a hold of this, at foundation level, I can't go more deep because time constraint. Same thing in the 11th CBSE, especially in journal topic. I think journal topic around 8th or 9th or 10th class. This is discussed aram se. Over point patina, I've taken one hour to discuss. Outstanding expenses separately, prepaid expenses separately, accrued income separately, income received advance separately. Because in 11th I had luxury life of 1 year to teach so much of data. But here we don't have that much luxury time. And even if I teach also, those who already attended 11th and 12th properly, they'll feel what sir is taking same thing again and again. So is there any point in repeating again and again? So in case if anybody is still not clear with this, what are you supposed to do? The 11th recording, what I gave you, please watch it in depth, one point, properly explained, properly. So rent outstanding is what? Liability. Rent outstanding is what? Liability. Which liability? Liability will go where in the golden rule? Personal account. Which personal account? Representative personal account. This is representative personal account. Rent outstanding is a representative personal account. Yes or no? As per modern rule, liability. Representative personal account. Please mention representative personal account and this is liability. Sir, this rent outstanding, prepaid expenses, accrued income, unearned income, still we are not clear. Don't worry. Though I tell you to go and do 11th class recording, still I'll teach you where you know. When we do final accounts. Because in final accounts, these adjustments will get repeated. So at least one example each I'll do in that point of time. But the pace is going to be a little bit faster. So if you do 11th ka recording and come here, in the final accounts topic, the pace you'll be able to match. You'll get more better clarity there. Got it, not got it. So this again, if you don't get it, don't panic. Don't think sir is not taking this. In final accounts, we have a proper question based on this. We'll do it properly. In journal, they're asking only classification. So I can't sit and go too much in deep. So as of now, remember the classification in foundation, sorry, in final accounts topic, we'll discuss in depth. Next is G, cash. As per golden rule, cash is real account. As per modern classification, it is asset, real and asset. Adjusted purchase. Can I teach adjusted purchase here? This is a topic which we dealt in 11th standard where in the final accounts, adjustment of final accounts. இவங்க கேட்டு வச்சிருக்கான் எடுத்தோடனே மூணாவது கிளாஸ்ல we are discussing adjusted purchase. Can I teach here? Not possible. So as of now, just remember, adjusted purchase is nothing but purchase account only. Purchase account is what classification as per golden rule? Nominal account. Nominal account. And as per modern rule, it is expenditure. Nominal and expenditure. Sir, what is the difference between purchase and adjusted purchase? Purchase means pure purchase, only purchase. Adjusted purchase means along with purchase, I add opening stock and minus closing stock. Now, why we add opening stock and minus closing stock? You will get the explanation at two places. One, you watch my 11th recording, adjustment of final accounts or final accounts. There I've discussed this in depth. One more time I'll discuss when I do final accounts with you in foundation. Got it, not got it. That point you'll understand what is the meaning of adjusted purchase. Is that okay, not okay? As of now, adjusted purchase means what? Normal purchase. Like purchase, you treat this as nominal account and expenses. Got it, not got it. So can I say from my side, the explanation for this is pending? From my side, explanation for this is pending. Yes or no? Yes or no? Yes. Closing inventory. Closing inventory. This inventory will come in two places. One in trading account, second in balance sheet. Second in balance sheet. Which are they asking? They're asking the balance sheet one. They're asking the balance sheet one. Got it, not got it. If they're asking the closing inventory that comes in trading account, the language will be different. Got it, not got it. So whenever they ask just inventory apnina, it is about balance sheet. What is inventory? Sir, at the end of the day, I own something in my hand. 100 laptops I purchased. In that 80 laptops sold. 20 is unsold. That is called as inventory, closing inventory. The unsold product at the end of the year is called as closing inventory. I own it at the end of the year. So it is my asset. So as per modern rule, it is asset. As per golden rule, real account. So real and asset. Any problem? Next is investment. I invested money in, let's say, share market, mutual funds. As per golden rule, what classification? I'll get this money in future. Anything that I get in future is asset. So as per modern rule, asset. And all asset will go to real account. Except bank, debtor, prepaid expense, accrued income and bills receivable. In the 5 exclusions, la investment varada illa. Appo it is real account. So real and asset. Real and asset. Any problem? Next, trade receivable. Trade receivable means what? Debtor. Debtor. Debtor means what? The customer to whom I've sold the goods on credit, which means I've not received the money. When will I receive it? In future. Anything that I receive in future is asset. So as per modern rule, what classification? Asset. Golden rule, debtor, trade receivable is personal account. But we don't know whether this debtor is human being or business or group of people. So we can't classify anything in income. We can only write as of now personal account. For me to classify as artificial or natural, additional information is required. Whether he is a person, Ram, Sham, Ghansham, or whether it is a company, Reliance, Tata, Jio, or whether it is representing a group of people. So I don't know as of now. So I will treat this as only personal account. So personal account and asset. Any difficulty? Is your understanding getting better with each transaction? Yes or no? Very good. Sales, income, expense, nothing mentioned. So we'll assume expense and income, sir. Income, expense, nothing mentioned. We'll assume expense and income. Down given a sale itself means what? Income. So it is nominal and revenue. Nominal and revenue. Sale. Oh, I went somewhere. Where I went? Oh my God. Sale tax payable they gave. This is what happens when you don't read the question completely. Appo sale என்னது? Only sale means revenue and nominal account. But this is sales tax payable. You know one thing? Sales tax in the word irukku illaya? It got scrapped long back. Sales tax went. After that, who came, you know? Wrong fellow, VAT came in. VAT went, and now who came in? GST. இன்னைக்கு இருக்கிற காலம் ஜிஎஸ்டி காலம். அவன் கேட்டிருக்க விஷயம் வந்து சேல்ஸ் டாக்ஸ் கேட்டிருக்க ஆதி காலம் 2001, 2002, 2005, 2000. That period was sale tax. Sale tax got modified to VAT. VAT got modified to GST. அப்பனா sales tax can I say is equal to GST? Yes. So what rule we'll discuss for sales tax payable? The same thing for GST payable. Got it? Not got it? Okay. I'm here only. Sales tax payable. What is the meaning of payable? I have not paid. Means I'm meant to pay. But when will I pay? In future. Anything that I pay in future is liability. So as per golden rule, it is liabilities are personal account. This money we have to pay to income tax department or sales tax department or GST department, which is the artificial personal. So this is artificial personal account. Got it? Not got it? Second, from modern rule classification, this is liability. So personal and liability. He put GST payable here. In question, what is he asked? Sales tax payable. So after sales tax got, who came in? VAT came in. Then VAT went, who came in now? GST. You should know the history. Discount allowed. Who allowed? We business allowed a discount. Allowed discount means what? Paisa kammiya vanducha, jastiya vanducha. We got less money than what we expected. Receiving less money is gain or loss? Loss. All the losses will go to nominal account. So as per golden rule, nominal account. As per modern rule, expense, because expense includes losses. Nominal expenses. Bad debts. What is the meaning of bad debt? I sold goods to customer for 10,000 rupees. That customer is called as debtor. Debtor is my asset. That debtor came and gave BPL to me. What is BPL? Bum, pay, lath. He gave 2 kicks on my butt. Get lost, I will not pay the money. He said, I will not pay the money. You have to receive how much? 10,000. He says, get lost, I will not pay the money. Now what to do? Record the loss. Record the loss. Debit all expense and losses. As per golden rule, nominal. As per modern rule, expenses. Got it? Not got it? Very good. Only one girl is answering. Nominal and expenses. Capital. Natural personal account. And here, capital is capital only. Drawings. Drawings belongs to which family? Owner's family. Owner will go to which account? Personal account. So capital and drawings both are personal account. Which personal account? Natural personal account. And in the modern rule, drawings is a part of capital family. So natural personal account and capital family. Natural personal account and capital family. Drawings belongs to capital family. Okay, not okay. So much are there, huh? Ayyo. Interest receivable. Interest receivable. What is the meaning of receivable? I have not received. I am yet to receive. When will I receive? In future. Anything that I receive in future is asset. So interest receivable is asset as per modern rule. As per golden rule. As per golden rule. Sir, all assets are real account except bank, debtor, bills receivable, prepaid expenses, accrued income. Accrued income is what is interest receivable. Oh my God. Interest receivable is nothing but accrued income. 11th in depth படிச்சிருக்கேன். Can I teach here? I'll teach in final accounts. Here no time. So please make a note. Interest receivable is accrued income. Accrued income means what? Income earned, money not received. Income earned, money not received. When will I receive it? In future. And this is called as asset. But accrued income is excluded from your real account. So where will it go to? Personal account. In personal account, where does it go to? Representative personal account. So this accrued income is representing multiple accrued income. I'm yet to receive interest, I'm yet to receive commission. So there are multiple accrued income. So we call them as representative personal account. Personal account, please write it representative, and it is asset. Sorry. You can say it, nothing wrong in it. So if a trade receivable, she's asking, sir, if a trade receivable is a single person, human being, upon a natural personal account. If trade receivable is a artificial person, let's say Reliance apdina, Ortana apdina, it is artificial personal account. But if a trade receivable is a group of multiple people, apdina, it is representative personal account. Got it, not got it? Okay. Rent received in advance. Rent received in advance. Rent received in advance. Rent received in advance. Asset or liability? Think and respond. Forget rent. CA inter fees received in advance. You are in which level now? Foundation. You are studying foundation with me in which academic year? Which academic year? Not academy. Which academic year? 26, 27. You will study CA inter with me in which academic year? That depends. Already to pass. You can't say 26, 27, 28. If you're studying with me CA inter next year, apdina, for that foundation you have to. Oh, but that was not the case for 11th and 12th. 11th, if the academic year is 26, 27, 12th is 27, 28. Guaranteed. But CA, no guarantee. Let's assume all of you will pass. Sir, what assume? We will pass, sir. Okay. All of you are passing. All pass declare. So what all pass declare? We have earned passing, sir. Okay, you passed with your credibility. You will study inter with me when? Next year. This year, which level? This year, which level? Foundation. Next year, which level? CA inter. This is CA foundation. Current year, next year. Now, inter ka fees, if a student pays me here, can I record as my income? Artha varsha fees when ipo pay panta. Can I treat this as my income? No. But what it is? It is a liability. Why it is liability? Because tomorrow, if that student does not pass aptina, this money what I've received, I have to refund back. So anything that I have to pay in future is liability. So this money will be recorded as income when it is earned. So when will I earn this money? When I provide my services. When will I provide the services? Next year. Apo this is income of which year? Next year. I'll be discussing about this a little bit in the next class. Got it? Not got it? So rent received in advance is a liability. You guys are okay, Abdina. Next class. If you're okay, I can spend on 4 things. What is prepaid expenses, outstanding expenses, accrued income, unearned income? One example I can give you. If you want, I'll give you. Or I'll go to next topic. Choice is yours. You can decide and tell me. I'm okay with either way. But later people should not come and tell, what, sir, you're going so slow, sir. Because some student will scold me, sir, you're going slow. Some people will say, sir, you're going fast. For me, I have to satisfy both the people. So I have to go in a proper pace. So what you say, I will do that. In my plan, I never had a thought of discussing these 4 representative account in beginning. I will discuss this, but only in the final accounts. That's okay, appadina, adu varaikum wait pandrathu okay, appadina, I'll teach there. You can't wait. I want to know now itself, appadina, I'll teach now. Choice is yours. Now, coming back. Prepaid salary. Prepaid salary. Representative personal account. Representative personal account. No doubt. Outstanding expenses. Prepaid expenses. Accrued income. Unearned income. All these 4 are by default representative. Representative personal account. As per modern rule, it is prepaid. Prepaid. I paid the expenses in advance. I paid money in advance. Your case, you paid inter ka money in advance. If any student paid the money in advance, and if that student doesn't pass aptina, I have to give the money back, which means you will receive the money back. So anything that you receive in future is asset. So prepaid is asset. Got it? Not got it? Bad debt recovered. Bad debt recovered. Bad debt loss aptina. Bad debt recovered is a gain. Bad debt is a loss means bad debt recovered is a gain. So what is the rule for gain? Nominal and gain. Depreciation. Depreciation. As per golden rule, expenses. As per what do you call modern rule? Expenses. That is expenses and nominal. Nominal and expenses. Personal income tax account. Personal income tax. We discussed this in 11th standard that whenever any sole proprietor pays income tax, that will be treated as drawings, not expenditure. It will be treated as drawings. Got it? Not got it? Personal income tax is always treated as drawings. So drawings, personal account. Drawings belongs to capital family. Capital belongs to personal account. And here it is capital account. Drawings is a part of capital account. So personal income tax paid or payable. Personal income tax is always drawings. Okay, not okay. If I use the word payable, it will be wrong. Just personal tax is fine. Because the entry for personal tax payable is personal income tax account debit to personal income tax payable. So personal income tax payable is what? Liability. Personal income tax is there, no. This classification is drawings. Got it, not got it? Seventh question we will do next class from the point of view of modern rule. With that, my explanation for golden rule and modern rule is over. Homework for you is what you know. Maybe if not today, you can do it in the upcoming class. Question number 4. The same question they're asking you to solve using accounting equation approach. From the point of modern rule, please apply and do the journal entry. And this same question again from the golden rule point of view. So you can take this as homework. That is on page number 2.23. Illustration 4, 2.23 is homework. This example is there now. Please take this also as homework, which is on page number 2.17. This also is homework. The next class, maybe we'll spend around 1.5 hours on modern rule and you'll be done with it. If you want, I can spend 1 hour on explaining what is your prepaid expenses, outstanding expenses, accrued income and unearned income. If you want. And directly I'll go to ledger also. I'll go to ledger in the next class itself. Is that okay with all of you? Decide and let me know. Can we wrap up? Chalo, great. So guys, that's all from my side for this session. I will see you all on next class is when? I'm not told. Okay, let ma'am decide. So let me see you all in the next class. Until then, bye-bye. See you. Take care. Thank you, people.